Good morning, everybody. Let's get this one up. How's everyone doing today? Welcome to the room. I'm feeling all philosophical today. You guys are in trouble. Good afternoon, Miss Jen. Good morning, Izzy. Good to see you. Feeling great. I love that. Jen, did you sync up your times with us? It's funny that you guys change time at different times than we do. It happens at all. I almost posted in the room. I was like, if you're not in America, we're silly. Brace yourselves. All right, guys. Start 2 p.m. now, not 1 p.m. Right on. They just changed it here. It was getting dark here at 4:30 in the afternoon. I don't know about you guys. That's no way to live life. I need the sunshine to come back. Gotta have the sunshine. Guys, today is Monday, November 3rd. Hey, Bajoy. Good to see you back in here. Sunset's there at 4:30. That is terrible. What in the world was that bar on the NASDAQ? I don't know. Bunch of buyers or a bunch of sellers, probably, Victor. Let's see. Look at that. So it took them 7 tries to get through that area, didn't it? 7 tries. And when they finally broke above and the sellers quit fighting, Victor, that's what happens when the sellers give up their fight and the buyers have their way. They go up. And the idea is that you knew where their fight was. You knew exactly where their fight was. It was there all morning. And it was the buyers tried, the seller said no. The buyers tried, seller said no. Again. And then finally, the seller said to hell with it. They keep coming back. Let's give them their way. We'll just go short up higher. That's all it was, Victor. It was the idea that there are controlling forces in the market. And you guys witness where they fight. You guys can see where they fight. And you can know when they may fight or when they may do that. But you can't always predict it. And I think that's one of the important things that we have to realize is that the market moves because people move it. The market moves because people with way more money than we'll ever have create trends and they establish momentum and they create these huge spikes and ours isn't to catch every move of it. I looked this morning, 239 billion is what's exchanged in the NASDAQ every day. The path of least resistance, the easiest way to get the job done is to focus on the best trades. Get good at the best trades. Be willing to sit through. So something to think about. Guys, we're going to check news. I check news every morning. Really, before I even look at my charts, I check news because I want to know when those big reactions can happen. So, Victor, like that giant bar that you just saw in NASDAQ, guys, that spike that you all just witnessed, the exact same thing could happen at 10 a.m. So this time we have a little heads up. This time we have a little forewarning that the market may react, that it may go crazy, that it could spike, that it could bump, that it could jump, that it could do all the things that could mess up our good times. So guys, at 10 a.m., I would say that the smart traders, I'm not saying any of you are not smart, but I'm saying that the smart traders probably have an alarm set for 9:55 and said, hey, you know what? I think I'm going to choose to not be in a position right when high impact news comes out. So that's my first stop every day, guys. And then we're going to get into it. We're going to have some fun and I'm going to talk. And I'm going to remind you that I'm here. My sole purpose with Nexgen software services is to help teach you guys to read your chart so that you can make good decisions. So that you can make decisions that suit your needs, so that you can make decisions maybe based on advantages if you choose to do so. Learning to read your charts is just the first step in getting to where you want to be. Using a checklist, guys, having rules, consistency, keeping it easy. The whole goal of the first hour in this room is to talk about chart reading, and we're going to do it on NinjaTrader, and we're going to do it also on TradingView. I always start with NinjaTrader first, just because we've been doing it longer. You're going to recognize advantages, and advantages become your trade. 90% of the typical day is doing nothing. Sitting on your hands, 90%, waiting for the advantages, being able to say to yourself, hey, I've got what I need, now it's time to enter. 10% of your day is actually entering because it's hard for the people in charge to get their poop in a group enough to give you that perfect trade. And I'm going to tell you right now, you are worth the perfect trade. But through your chart reading, you're going to understand where the market is likely to continue. This becomes entries. Where the market is likely to go. And I think this becomes a very valuable concept because you'll be able to look at your indicators and you'll be able to say, man, with all of this strength, with nothing in the way, there's my line that where it's most likely to go. I'm going to find a way to get there. And then the most important one, and probably the most ignored one, is that you'll understand where the market is likely to stop. These are what we call termination conditions, guys. These are areas where decisions are being made that could end a trend. Sometimes those likely to stop areas stop them once. Sometimes you'll see fights there for hours, but you'll always know where they are. And then you'll have to make the choice not to trade into them. When we move forward here, we're going to talk about 3 different trades. Well, actually, I'm going to talk about one trade, guys. I'm going to talk about one trade. Whether it is NinjaTrader, whether it's TradingView, we're going to talk about high probability trades. We're going to talk about the best looks, guys, the path of least resistance, the way to get to where you want to be with the least amount of friction. And a high probability trade means that all indicators on all charts align with the trade rules. Once you recognize and understand and you can say to yourself, I'm in a high probability scenario, that's when it opens the doors for medium probability scenarios, where most of your indicators align, but a small issue exists, one advantage gone. And then you'll also recognize if it's a low probability scenario, when there's multiple conflicting signals, reducing the chance of success. Now, if you can't identify the best trade, it's going to be more difficult to know when the trade isn't the best trade. So I encourage you guys to focus on the 3 advantages that create a trade. Every time you look at a chart, you're going to define direction, momentum, path, and then ultimately an entry, whether or not you choose to get in. When you can define momentum with nothing in the way and define your entry, guys, that's the high probability. This is what we talk about first in this room. This is your foundation. This is your stepping stone. This is probably not your get-rich trade. Hey, good morning, Cam. Drive safe. This is the trade that allows you to recognize advantages so that you can find the next trades, guys. Very often new users feel very shackled when I talk about a high probability scenario, believing that they're only allowed to take that trade. Guys, I'm not here to give you permission to do anything. I'm here to teach you to recognize advantages so that you can make good choices. And when you recognize one of the very core advantages going away, you're going to say to yourself, this is a medium probability scenario. And if you begin to see multiple advantages going away, there's got to be this point where you say, egads and little fishes, this is low probability. This is not my best of the best. And going into this trade, I know that. You control the entry. Nobody can make you enter. I won't tell you when to enter, guys. This classroom is an educational classroom. This classroom, let's do the cool little warning. This classroom is for informational purposes, guys. This classroom is for educational purposes. This classroom is designed to teach you to read your indicators so that you can make good decisions. I can't force you into making good decisions. I can't force you to have the patience to make good decisions. But when you know what's working for you, those are the advantages, and you know what's working against you, those are the advantages going away, you're going to make good decisions. You can decide to enter. You can decide how assertively you're going to manage. So my job, my hope for everybody in this room is that you don't enter this room looking for the money, but rather looking for the process that creates the money. Nexgen's gone through an enormous amount of effort to give you rules. So I'm dropping in the room right now 2 plans. One will be for NinjaTrader, one will be for TradingView. And I will pull up a copy of the plan for NinjaTrader because that's what we're going to talk about right now. Oop, you also got the PowerPoint I'm teaching with. The high probability trend trade on NinjaTrader. Guys, this plan is a stepping stone in your learning journey, and it's designed to teach you how to read indicators, and these trades are designed to optimize your chances of success. It will be through study, simulation, class feedback, and practice. You will write a plan that suits your needs. Now, I'm going to tell you, I've never had anybody stick only to this plan, follow it as intended with the rules met, and do worse than like 75-80%, guys. Now, the other side of that, everyone's like, yes, I want to have that win percentage. The other side of that is that you have to remember that 90% of your day is doing nothing. So this is a plan that embraces that 90%. This is a plan where you are going to maybe trade 1 minute out of every 10 minutes you sit in your chair. And if we're being really honest, you'll probably be in the market 30 seconds every 10 minutes you're in your chair. It defines entry. It gives you a checklist for entry. It helps you with the management, and it gives you that second medium probability trade. Your job will be to learn rules. And guys, you should be able to recite your rules. You should be able to say, in order to take a trade, I need this, this, and that. And then you need to know exactly what that looks like. So as you go on that journey to build that recognition, guys, post in the room. Post in the room, share your trades, share your thoughts, share your chart reads, share your questions. The people that post the most get to where they want to be the fastest. When you are in the moment, especially as a new user, there's some adrenaline in there. There's some anxiety. There's some hope, and you don't always see the clear picture. Not as a brand new user. How could you? You're brand new. If you post in my room, we'll have a private session. And I will say, based on your picture, hey, I know that you did this, and this is what you saw, and this is what you did. Now let me point this out. Did you notice that there was something in the way? Did you notice that you were fighting strong triggers? Did you notice that you had sacrificed two of your advantages? And guys, very often, the answer is no. Nope, I had no idea I did that. At least it was for me. So post in the room. And when you post in the room, talk about the whys. Why did I take this trade? Not, hey, I entered here, I exited here, but rather, I entered here because of the momentum, and I entered here because there was nothing in the way, and I entered here right at an area inside of triggers because rule number 3 allows me to reduce my risk. Tell me what you saw. Guys, I'll give you the best feedback I know how. And then the second thing is simplify. Can't stress that enough, and I'm going to go back to telling you guys that there are only 2 trades on the KISS plan. That's it. There's a high probability trade. There's a medium probability trade. Now, that's not the only way to use the software, guys. Not at all. There's 1,000 ways to use the software. I made this picture this morning. This is a brainstorm of mine that I'm trying to come up with. There's a high probability trade. I don't know if this will resonate with anybody. And the high probability trade is the shortest path to your goals, but it requires the most patience, the most doing nothing. But what you'll find is that if you are typically winning 70 to 80% of your time, it's difficult to not reach goals. Now, there are thousands of ways, and there's a lot of other things that are going to tempt you, like the siren song, and there's medium probability and mismanaged and low probability, fighting triggers, jumping the fudge in, HVA, potential to break. Every time you deviate from simple, you have to change your management. Every time you deviate from simple, you have to focus on the rules for that particular instance, guys. And if you focus on, first, initially, the highest probability trend trade you could ever take, these begin to present themselves. They really do. So keeping it simple in the beginning pays dividends. And then the second way to get to where you want to be the fastest behind posting pictures, guys, in the room is to use the spreadsheet. So you're also going to post pictures in a spreadsheet. And I'm going to show you the NinjaTrader spreadsheet. And what I've done is on the first page, there are strong triggers, clear path, and entry. Those are your 3 core advantages. Now, if you can't identify strong triggers, you'll never be able to really have that first advantage, but you'll also not really be able to take HVA trades. You're going to have difficulty with momentum trades, and you're really going to struggle with that just jump the fudge in trade that you guys all seem to like. Clear path. If you can't identify a clear path, you may trade into areas that could stop the market. That's one of the biggest killers and most broken rules among new users. Just not having room to make any money. But if you don't understand those termination conditions, you also can't set up for the momentum trade. You can't set up for the HVA trade. You can't give yourself the advantage of a strong top or bottom. So the very basic trades open the door for the next trades. And then this first entry, guys, is just a way to give yourself the highest chance of success with the least amount of risk, and the most clearly defined entry that I know how to give. There's about 500 pictures of high probability, medium probability trades here. And if you scroll through them, what you're going to find is that high probability trades are just a pattern. It's a pattern that utilizes three advantages, and it is predictable, and it is repeatable, and it is testable. And if you do your due diligence, you will prove that this particular pattern wins more than it loses. And that trust that you develop through study is what keeps you from hesitating. It's what keeps you focused on getting in when it's time to get in, and more importantly, getting out when it's time to get out. There are ideas on management here, and like I said, patterns that repeat themselves. Once you're good at the very basics, guys, other things present. They really do, and you'll start to find more and more creative ways to use the software. So build your plan. In the beginning, the people who take the most pictures, and not just taking the pictures, but the people who annotate. Every time you take a picture, and that's one that isn't a good example, if every time you take a picture, you talk about what you see, why you did it, where you did it, how you did it, what you're doing is you're creating this little neural correlation between what your eyes see and what your brain thinks, and it literally slows down a market for you, and it makes it easier to feel confident getting into your trades. And then finally, there's a trade tracking sheet. And guys, both spreadsheets for both platforms are similar. The TradingView spreadsheet has the pictures that show you what it looks like, a place for your pictures. But the tracking sheet is, in my opinion, is going to be the most valuable tool that you have as a brand new user, because the tracking sheet is where you're going to take those pictures of your trades, and those trades are going to be annotated, and you're going to be able to talk about it whether you win or lost. But there's a section for feedback. There's a section where when I look at your chart, I'm going to say to you, hey, did you recognize that you traded into a termination condition? Were you aware that you took a momentum trade without momentum? Let me show you where the higher chance of success comes from, guys. And that's part of that private session you get with me. But the most important part of that, and the most underutilized part of that, is you're going to use your spreadsheet every morning. 3 to 4 minutes is all it takes. Study what you did yesterday. So if you were in the room Friday and you posted 5 trades, in that 5 trades, I probably saw what you do well, but I also saw your tendency to break a rule. And that's what we all have, guys. Everybody is going to break rules in the beginning, whether it's intentional or not. So ask yourself what worked. And very often you'll find what works is following the rules, having the advantages, being in a trade that you can prove wins more than it loses. And then you have to ask yourself what didn't work. And this is what's hard, because society says, well, if it didn't work, you failed. And failed is such an ugly word. You're going to learn. And when you ask yourself what didn't work, you're going to see it from the feedback. So my thing that didn't work was trading into large chart areas, termination conditions. And I didn't realize that I was even doing it until I started posting in the room. And then I started this habit. Let me go back and look what I did. Let me see what I did. And what I noticed is that repeatedly, I would see into termination conditions, trading into areas that could stop the market. And because I took the time to do that, what happened is not only did I recognize that I was having that challenge, but John Novak, who ran the room at the time, took the time to tell me how to avoid it. Hey, Mark, here's your thing, man. You keep trading into these areas that could stop the market. So here's what I want you to do. And guys, when you recognize your thing, this is what I want you to do. I want you to take a piece of paper, and I want you to take a big fat Sharpie or the most delicious crayon that you own, and I want you to write what your thing is. Trading into terminations, jumping in too soon, fighting triggers, whatever it may be. We'll find it together in about 4 or 5 pictures. And what you're doing is you're saying, okay, this is where I have a lapse in judgment. This is the one that seems to be pulling money out of my account. This is the one thing that I'm really going to focus on before I take a trade. And you'll be amazed at how quickly your thing disappears. And sometimes it's replaced with another thing. But when you begin to eliminate the challenges one by one, you really do start focusing on the successes. So post in the room, guys. Keep it simple, keep it focused, and learn the rules. Learn what they say and learn what they look like. So it's only 3 rules for a high probability trend trade on NinjaTrader. That's it. When a rule is true and advantage is in place, the recipe for a trade is momentum, clear path, and entry. That's the best of the best, guys. That is the highest probability. That is the most outstanding look you could ever have. It is just a drop in the bucket that is day trading. Once you understand momentum and path, you're going to begin to see all sorts of other trades that open themselves up. You'll even probably create trades based on what you see. But if you learn this one trade first, that knowledge and advantage recognition is what opens those doors. These 3 rules happen on only 2 charts. Simplicity. Your large chart is slow moving, it's a broad stroke, and it shows the overall opinion of the market. And when I say that, your large chart defines direction, it defines momentum, it defines areas, and it does it all with 1 bar, the most current printing bar. Rules 1 and 2 are met on that bar. You'll have the advantage of momentum and a clear path on the first bar in the large chart. Now your small chart is an x-ray of that 1 bar. We're making decisions to enter all the way at the bottom of that bar, way down here on a small chart. And your small chart shows fluctuation within the big picture. We're going to use that fluctuation to define entry. It's going to allow you to reduce risk. It's going to allow you to maximize profit potential. And my favorite analogy, who are you trading with and who are you trading against? The large crowd. I picture them. It's a true story. When I'm trading, I picture a crowd of people with more power than me. And they create trends. When they want the market to go up, it goes up. When they want it to go down, it goes down. And if the opposing forces can't make a decision between up or down very often, you won't have rules met. They will create the momentum that we look for to push the market. They will react at the areas that can be defined as termination conditions. The large crowd wins, guys. Your plan is designed to keep you in tune with the large crowd. The small crowd, these are the fighters, and this is for both platforms, guys. These people create the little bit of down, the little bit of up, the retracements, guys, the fights within the big move, the small move within the big move. These guys, when the rules are met on the large chart, typically fail 70 to 80% of the time. Your high probability trend trade is designed to have you embracing large chart advantages and entering on small chart failure. And if these guys fail 70 to 80% of the time, the high probability trend trade puts you in a position to have the potential to win 70 to 80% of the time, which means 20 to 30% of the time, you're going to take one, guys. You're going to lose a trade. Trading is not about being unbeatable. Trading is about probabilities, putting yourself in a position where you can define an edge. The edge is repeatable, it's testable, and you know without hesitation that when you have your rules met, it's not about the one trade. It's about the 100 trades. I'm going to win about 70 of them. I'm going to lose about 30 of them. I'm going to learn how to manage them so I can take that win percentage and turn it into a profitable plan. We're going to use areas to do it on NinjaTrader, guys. We're going to use divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow 1-to-1s. Horizontal lines on a large chart. You don't have to know how they're created. I just want you to know their names. Because divergence highs, resistance, and 1-to-1s can all behave as resistance, an area that could stop the market in an uptrend. And divergence lows, Fibonacci support, yellow 1-to-1s on a large chart are all areas that can behave as support and stop a market in a downtrend. You just need to know the names. You need to know that you got to look for those horizontal lines on your chart. You're also going to have trigger lines. 90%, I would say, 90% of the stuff that you're looking for has triggers in it. Small triggers are a fast-moving average, 2 solid lines. Large triggers are a slower-moving average. They're actually larger than the small. That helps. But they're a dashed line. Fast, slow, small, large. That's all you need to know, guys. They're going to show up in defining momentum. They're going to show up in defining termination conditions. The large ones are going to be used to define your amazing entry, guys. Triggers show up in everything. So learn how to use them and learn how to use them in regards to the rule in place. So we're going to break each rule down individually. Large chart 13.2 needs strong trigger lines. Strong trigger lines create the advantage of momentum. New picture today. Strong trigger lines is a separation between the small and the large. If they're all red, it's going down. If it's green, it's going up. Separation means that the odds are favorable for the market to continue down. You'll be able to gauge that on the first bar. This is the best of the best, whether it's smalls below the large or whether it's smalls above the large. It's the gap that defines strength. As the gap closes, there's still opportunity in the market. But if you don't understand the best look, you're going to struggle to take a trade with slowing momentum. When the smalls work their way inside of the large triggers, the space is no longer there. Guys, this is weakness, and anything could happen up or down. And you can still take short trades, but they have to be managed very well. And as a brand new chart reader, a lot of you aren't capable of managing these trades very well. Not yet. You will. This is always your best option because when you have weakness, this is where areas are more likely to hold. This is where retracements from the middle of nowhere are most likely to happen. So if you keep it very, very focused, guys, in the moment, in the now, I either have separation, which is strength, there it is right there, or my separation is gone, and I have to define it as weakness. And if you keep it that black and white in the very beginning, you're going to be focused on the best of the best. And as you focus on the best of the best, out of your peripheral, you're going to begin to see more opportunities. Is everybody good with that? Momentum's a pretty easy one. If there's separation between the small and large and the direction the trend is, life is pretty good. The odds are favorable for that market to continue. But there is something that can stop all that momentum. We call it a termination condition. It's a horizontal line on a large chart, guys. It's where the large crowd's making decisions. And you'll know about them long before you ever get to them. And you'll know without question that that's a termination condition. And look what the market did. And you'll know that this is a termination condition. And you'll have rules to define this as an area that's more likely to hold than break. The same thing happened down here. The same thing happened up here and over here. Horizontal lines on a large chart can stop the market. And about 75% of the time they do. About 75% of the time, trading directly into an area that has been defined as a termination condition is going to result in a loss. We talked about this Friday. If you knew that 75% of the time you ate chicken, you'd get food poisoning, would anyone in the room eat chicken? Probably not, right? If I knew that 75 to 80% of the time I ate pork, I would get trichinosis, I would avoid pork like the plague. Well, traders don't look at that. Traders say it tastes too good, I'm going to trade into it, I'm going to hope that it breaks. And it's not the one time that it breaks, guys. It's the 10 times that it doesn't. This is what we call avoidable losses, and this is where fortunes are lost. So you've got to learn a simple recipe to find a termination condition. And I'm going to remind you guys, areas break all the time. Areas get absolutely smashed through sometimes, typically with momentum. But there's a recipe for understanding when they're less likely to actually break. So every line that you reach on a large chart in the moment is a termination condition. So if price reaches a line, the bars reach the line, dynamic Renko bars get to Fibonacci support, get to yellow 1-to-ones, get to a divergence low. If all of your triggers are above the area, if both small and both large are above the area, that's how we define a termination condition. And a termination condition simply means wait to see what the large chart wants to do. Because at a termination condition, they may choose to go the other way, right? They may try to push through it and fail. They may reverse the market completely. They could create big ugly bounces that are untradeable, and it would pull you out of a position. You'll never know what they're going to do, so your highest chance of success comes from waiting for the reaction. Does that make sense, everybody? Trading into areas, trading into termination conditions is one of the biggest source of losers for new users because this is going to keep you patient. But areas break. And when your small triggers absolutely smash through an area with momentum, when two of them are through, you can say, hey, this area now has the potential to break. And guys, you can take trend trades with the potential to break. It's the second trade on the plan. It's never high probability because it is just potential. If you want to heighten the odds, if you want to create more of an advantage, let both small and one large get below that area of support. And when you have momentum, this is your best look. This is what it looks like when an area is most likely to break. 2 triggers does not inspire confidence. 3 triggers get you pretty excited about it. And there's a lot of opportunity there, but they must be managed assertively because we're banking on the potential of that area to break. Your advantage of a clear path is no longer in play. You're working with 2 out of 3, hopefully, which is medium probability. But once support breaks, 2 smalls, 2 large, when 4 trigger lines get below the area, support behaves as resistance. The area is broken. The path is clear. And your path remains clear right until you reach the next line. And at the next line, guess what? It's a termination again. We go right back to number 1. So there's going to be a lot of waiting. First, it's a termination. Guys, every line you reach in the moment is a termination condition. If you're not already in a position, the rules say no trades into that area. If you're already into a position, you may use momentum and try to hold and see if it breaks. If it's really going to break, it'll start with 2 triggers through, both small, and a lot of momentum typically, but it's only potential. And if you want the highest potential, let 3 lines get through. Let both small and 1 large break through that area. Now that potential is stronger. A breakout is more likely to happen. You have a better chance. But the area is not broken. The path is not clear until all 4 triggers get above that area of resistance. When it does, that area of resistance becomes an area of support, behaves as support. Your path is clear and it remains clear until you reach the next area. So I'm going to give you guys this one. If you're a note taker, just grab this, put it in your spreadsheet. No triggers, no trade. 2 triggers, not my best shot, but still can take a shot. 3 triggers, I start getting excited. 4, now I've got a clear path. Does that make sense, everybody? These are areas where the people in charge are most likely to make decisions. And this is crude oil. This is crude oil this morning, and I want you to see something. Weak triggers, big retracement. Weak triggers, big retracement. No momentum. There's your reversal. Momentum breaks areas. They begin to weaken. There's your retracement. 2 triggers through, can't break. 2 triggers through, can't break. No triggers through, can't break. And now the market's coming down to that next area. And guys, this is where you're going to have to make a decision. Do I want to hope that area breaks, or do I want to wait for the reaction? Do I want to wait for the advantages? Do I want to embrace the edge of having a clear path? And guys, only you can make that decision. And this is where I give you the sad reminder. The most common thing with new users is, Mark, the trade never sets up. Have you ever been in an argument with your spouse and she says or he says, you always do this, and we're all guilty of it. You don't always do it. My wife just said yes from the kitchen. You don't always do it, but it feels that way in the moment when the emotion is strong, guys. And when you're sitting on your hands and you can't seem to find a clear path, you're getting mad. You're getting despondent. That fear of missing out kicks in. Well, I'm going to remind you that there's going to be times when areas are stacked, and there's going to be times when it's fib after fib after fib, and there's going to be times where you just can't seem to get a clear path. Guys, this is 90% of your day. It really is, truthfully. 90% of your day is being patient. The hardest skill a day trader will ever master is the ability to not pull the trigger, the ability to stay out of the market when the market isn't giving them what they want. And with a little bit of study, the cool thing is you will be so in command of your entries and exits that they can't force you in anything. You'll be like, not my money. Futures markets, Paul, we've all been there. Futures markets trade an average of $220 billion hourly, guys. I looked at the NASDAQ this morning, $239 billion exchange in the NASDAQ daily. It takes $400 a day to be in a six-figure income, guys. It takes $400 a day to put you just north of $100,000. It's not about all the trades. It's not about being the first one in. It's not about being the last one out. And it's certainly not about taking chances, guys. Trading is probabilities. And when you have an edge, when you can prove a pattern wins more than it loses, you're going to learn how to never hesitate and to be okay. I'll show you, Swathi. Dun, 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 dun. So there are an average of 252 trading days in a year. Sometimes it's 251. I think we have leap years in there. So Swathi, I want you to see this. $400 a day consistently times 252 trading days a year is $100,800. Hypothetically, that's before commissions and taxes. $400 a day, Swathi, puts you in a six-figure income. Now, if you've been paying attention to my room, you're going to say, Mark, 400 is pretty easy. Or I can make 400 without effort, but you could probably do it in 2 or 3 trades. But some of us feel like we have to be in all the trades. We have to be in all the moves. We got to take chances because the market just doesn't produce. And it's not true. I'm here to tell you it's not true. Being patient typically creates the highest yield. And guys, $400 a day. I'm going to show you something else. And I'll just use the funding company as an example. Well, Swathi, what is today? It's Monday, right? So today is Monday. Everybody's coming back from the weekend, just like you. Everybody's sleepy, just like you. And they're going to jockey for position to get the day going. And I don't control whether or not the market gives you a trade. I don't control whether or not the market has rules met. And you're absolutely right. They can't figure it out, can they, Swathi? They couldn't push it down here. They couldn't make it go through here. They didn't get through here. They certainly didn't get through here. So Swathi, there's 2 ways to look at it. And I love when you talk in my room because you bring up what everybody's thinking. I didn't lose any money trading into that area. And I didn't lose any money trading into this area. And I didn't lose any money trading into that area. And I didn't lose any money not taking a trade without momentum, right? And here, I've only got the potential to break with the momentum. And if it sets up, there may be an opportunity. But Swathi, the market only just opened 37 minutes ago. 37 minutes ago in the United States. So we're going to see. And it's difficult when you have a time frame that you need to trade within. And it's frustrating sometimes when trades don't set up. I don't think I've ever had a day without a trade. Now, I've had a day with 2 or 3 trades, and my patience typically worked out well. But guys, remember, and it goes back to the same thing. If you average $400 a day, Swathi, what's going to happen is you're going to have a really slow day, and you might make $200. But there's also days where it's almost like the market is an ATM and you may have $1,000. So it's a $400 average. And if the market's giving, take from it, right? And if the market's not giving, that patience makes it easier to hit the consistency. And again, it's all about having an edge. It's about trading with the highest probability of success so that you can find the highest probability of success. Does that make sense? Of course there will, Swathi. Of course there will. There will be times when a textbook termination with weak triggers breaks. There will be times when you have a clear path and momentum and it never gives a pullback. Absolutely, it does happen. But here's the thing. You don't know if it's going to be one of those times or if it's going to be one of those times where the pullback does happen, right? So you have to have a plan. And Swathi, you're going to see in this room, A lot of people that when they have momentum and when the path is clear, they have embraced a trade that was created by a Nexgen user, Ron C. He doesn't even trade on Mondays. He goes to the beach. But this trade that he created is called the chili dog. And the chili dog is a trade that he said, you know what? I learned how to figure out momentum. And I learned how to figure out termination conditions. And when I had these two things, what I noticed is that if every indicator on every chart is showing momentum with nothing in the way, I can make $100, $200 at a time. And he takes 11 ticks on crude oil. He makes $110 per contract. Swathi, he also shared with the room that with this very simple plan, last year he netted $160,000 based on trading where he never took more than a $110 trade. He just adds more contracts and takes the perfect trade. And this is a trade that relies on understanding that decisions are made at key areas and there's no reason to trade into them, that momentum is hard to stop. And when you couple that awesome momentum with absolutely nothing in the way, Swathi, there's so much more opportunity with the software. And then the flip side of that is that if you don't understand momentum, how are you ever going to take a momentum-based trade? And if you don't understand clear path, how are you ever going to know when it's time to take that particular trade? So what I'm doing is I'm saying, hey, let's learn a little recognition so that two doors swing right open and you get the kingdom in front of you. Does that make sense, Swathi? And I'm not holding you back. I'm teaching you the most valuable lessons you could ever get so that you can see more. Does that make sense, everybody? New users feel stifled. I know they do. And there's nothing more frustrating than watching people in the room taking trades that don't fit this plan and feeling like, damn it, I'm being left out. How come I'm not taking these trades? Guys, the reality is you're just not in that position yet. You haven't figured it out yet. You haven't recognized your patterns yet. But you will. And they're easy to recognize when they're rooted in momentum and path in some form or fashion. But when you have it, guess what? We're going to go define our first entry, the best entry, the highest probability entry. And this says that you're going to use a limit order to buy or sell a pullback in an area inside of triggers. And it's imperative, guys, that you learn this lesson and more importantly, that you learn this language. And when you trade and you look for an entry, here's my guys, this is as good as it gets. When you learn the phrase, buy or sell a pullback, what you're doing is you're saying, I understand the market moves cyclically. It goes up, it goes down, and there's little moves within the move. And if I wait for that pullback, I'm going to get the best entry with the lowest risk. And you're going to do it at an area. And an area on the small chart for entry is going to be a fib or a mid band or a yellow 1-to-1. Because the same way on a large chart, Robert Mark, I'll answer that one in just a second. The same way on a large chart, these areas can stop a trend. On a small chart, they can kill that small crowd fight. They can shut down everything the people without the power the large chart has are doing. That's why entries come from areas. But the areas need to be inside of triggers. And here we go. And I think this is the most important piece of the language. So I will buy or sell a pullback at an area, and then I go all caps, guys, because this is where the accuracy happens. It's going to be inside of triggers. And I think that's the most important word, the most important set of words in this one. Inside of triggers. Your triggers will tell you exactly where that retracement is most likely to go. And when there's an area inside of them, that's where the market's most likely to bounce, guys. In this entry pattern, and that's exactly what it is, it's just a pattern. I can buy a pullback, that small little push. I can do it at an area, fibs, midbands, yellow 1-to-1s. I can insist that they're inside of triggers. And if you say that every time you look for an entry, I'll buy a pullback at an area inside of triggers, guys, you're going to know where your trade's coming from long before the market ever gives the pullback. And it really is just a pattern. When the large chart says up, when the large chart has a clear path, guys, this is your entry pattern for the high probability trend trade. And I'm going to go back to what Swathi was talking about. Sometimes you don't get a pullback. Well, that's a momentum style entry right there. This is a trade that you can recognize when you understand the idea of a termination condition. This is a trade that you can recognize when you understand momentum. This is a trade you can recognize when you become tuned in on the idea that when resistance breaks, it becomes support. These are all very, very basic concepts that take you to more trades. And guys, if your momentum trade fails, which means you get a reversal bar, a down bar that closes over on the other side of the triggers, your jump in trade is over. Your momentum trade is over. Momentum is lost. It's done. The pullback has begun. So Swathi, there's opportunity to get you to that pullback. And if it never happens, you're in the trade. But until you understand momentum and path, it's more difficult to catch those. Guys, the reversal bar signals the beginning of the fight from the small crowd. It sets the pullback in motion, that small retracement counter to the underlying trend. And new users at the time of the pullback, and really with a little bit of study long before it ever happens, you're going to say that magical phrase. I'm going to buy or sell a pullback at an area inside of triggers. And what you're going to realize is that triggers define where the pullback is most likely to go. Somewhere from the top to the bottom, but the bottom is the extension. That's the lowest point we expect the retracement to go if this trade's going to work. And the market can bounce from areas inside. And I don't know if it's going to be the mid-band. I don't know if it's going to be the 1-to-1s. Guys, I'm good, but I'm not that good. So my plan says, when I identify the areas inside of triggers, I will activate a limit order at the highest point, closest to the reversal bar, because of the large chart momentum, because of the large chart clear path. And guys, this is your entry for the high probability trend trade. If you panicked and jumped in hoping the market would go, this reversal bar gives you two options. You either exit because you lost momentum and no longer have an advantage, or you have to put your stop all the way down here beyond the triggers and areas, because this is where the market shouldn't go if this trend trade is going to win. And every jump in trade, when the rules are met on the large chart that retraces, typically turns into a trend trade 70 to 80% of the time. Robert Mark, if you want it, let me drop there's the whole plan. I thought Ron was full of beans. True story. So I went back and I did what I asked you guys to do. I went back to try to prove him wrong. I went back to tell Ron, dude, I think you're full of crap. There's no way this works. So much so that I created a checklist for entry that I used his management. There it is right there, 7 tick stops, how to study it, and pictures of it. Because I was like, I'm going to prove this guy can't walk into my room and tell my users that there's more opportunity. And I'm saying that facetiously. So everything you need for it is on this. But let me give you a warning, Robert. This is for crude oil. This is for the S&P. If you try to utilize this on gold, you're going to get slaughtered. If you try to utilize this on the NASDAQ, you're probably going to get slaughtered. It's not a trade for crazy volatile markets. It's a trade for very smooth markets like crude oil, like the S&P. I love the trade. Most of you will mess it up. So take the time to study it. You can put it in the room. I don't mind talking about it. Let me know if that helps and if you have questions, Robert Mark. Guys, reversal bar starts the pullback. Areas inside of triggers define where the market's most likely to continue. Anything below that retracement zone, guys, anything below those triggers, this is where the market shouldn't go. Well, then you didn't get in the market, Swathi. That's it. If it doesn't touch your limit, guess what? You're not in. Maybe it's not your money. Maybe it's not your trade. If it doesn't touch my limit order, I'm not in the trade. I know, right? Swathi, you're learning right now that you don't have to be in every move. And you're learning patience and you're focusing on advantages. And Swathi, I'm going to say it again. This is the best of the best. This is the highest probability. This is the greatest entry ever. And when you learn this entry, you begin to create expectations, Swathi. And if I've got an area 30 points away and everything happened for the trend trade except hitting my entry, I might choose to enter anyway. I might use that reversal bar as a stop placement. There's a million options outside of the best option. And if you learn the best option first, you begin to see them. I don't know what that means. You tried divergence line, bounce back on small chart, small profits multiple times. It worked. All right. Fantastic. I don't know what it means. I can't picture it. I am so right-brained that everything is unicorns and rainbows in my head. Show me a picture of what you're talking about. Maybe you just found a pattern that works for you. So what I would encourage you is go find 50 pictures of exactly what you did with the exact same entry, with the exact same conditions. If it wins 30 of them, guess what? You found your new pattern. If it doesn't tell me anything. You went long. What was the large chart doing? I'll tell you exactly what the large chart was doing, Swathi. In this picture, your large chart had momentum and your large chart had the potential to break. And you just jumped in hoping it worked. And guess what? It did. But without a large chart, this means nothing to me. What this tells me is that you probably got lucky. It's not a pattern or you would have been long right here as well, right? And it's not a pattern or you would have been long somewhere over here as well. So why did you do it? Because you got tired of waiting? Because you saw advantages? And I'm not trying to beat you up, but what I'm saying is it's easy to make money on simulator. It's easy to take the wrong trades on simulator. It's so easy to say, oh, look, I think the market might do this. So I'll just go long. But no, I'll go long on 20 contracts. And here's where the challenge comes in. If I get paid at 94 against strong triggers, if I get paid against every indicator down, if I get lucky, my brain has absolutely no idea that it was luck. And guys, luck tends to run out. It's what we call a short-term victory, creating long-term failure. Any of you guys that were simulator millionaires and can't seem to pull it off live, that's a very valuable lesson. This is your best entry. Swathi, it's not your only entry. This is your best entry. It's not your only entry. So what you have to do is you've got to begin to learn this pattern. And when you learn this pattern, it opens doors. And when you can say, I have momentum and at least the potential to break, right? I can define a pullback to an area inside of triggers. And that's my best trade. And then Swathi, I want to go on this. If you go through the very basic concepts, you know that with this look, the market is more likely to push to that divergence high because of the momentum and path. Does that make sense, Swathi? If you start saying, oh my gosh, my large chart looks like this, that's where it's probably going to go. If they don't give you your entry, is there any reason you can't find a way to get in with the expectation, with the momentum, with the path? And that's one of the things that happens too, Swathi, is when you, and this is everybody, and forgive me, Swathi, for saying your name so often, but you have the courage to ask the questions, and I love that. I adore that. Guys, once you understand this concept, once it starts moving in the direction, you're like, whoa, this is a high probability trend trade, and a high probability trend trade more often than not makes it to the next area. So that means I've got opportunity, even if I miss my entry, all the way to the next area. There's a momentum style entry right there after the trend trade. There's a momentum style entry and it fails and turns into the trend trade. So while I have you guys focused on this one first, you're going to start to see all those other opportunities around that one trade. And that one trade, when it typically wins 70 to 80% of the time, that success builds confidence, guys. And the hardest thing is to not be where you want to be. Did anybody in their professional life start making professional life money in the first year on the job? I didn't. I don't know. I don't think a lot of people do. I think that's a problem with the younger generation too, is they want six figures out the door. No offense, Nathan. But what they don't tell you is that you don't make six figures out the door. You make six figures because you start getting good at your job. You make six figures because you learned the groundwork, because you learned the patterns, because you learned the method, because you learned how to be a part of that business, and then you got really good at it through repetition and through hard work, and you rose through the ranks, right? And has anyone ever known just the laziest mofo ever? And that lazy mofo complains about how they can't get a promotion. And that person that doesn't do the work, that doesn't show up on time, they start bitching about how they got passed over or they didn't get a raise. And they are convinced that it's the world out to get them. And guys, people that lose trades more often than they win are convinced the market is out to get them. And very often it's because they didn't do the work so that they could get to that position. And I say that because I'm guilty of it as well. So if we go back to a live market, and I want you to see this. If we go back to a live market, we know crude oil really hasn't done much today, right? Hasn't given a lot of opportunity. Here is two triggers through, didn't reach resistance. There's your mid band. So Swathi, you went long right here directly into a termination condition. Yours looked a little different, right? And guys, you may find moves within the move on stuff like this. 18, 25, 40, 55, 65, 132. And it happened in a span of over 15 years. Absolutely, Victor. And trading is no different, except everybody wants to go from having never seen a market to making $1 million inside of a couple hours, right? And it's not realistic. But what happens is that when you learn the pattern, and guys, the pattern is the same, whether it is crude oil or the S&P, when you learn the pattern, the pullback to the area inside of triggers, if you caught this short trade, guys, it went on for days. It was beautiful. 3 minutes to news. Thanks, Victor. So I know, Swathi, you're watching crude oil, right? And you're like, I'm watching crude oil for opportunities. Is there any reason you can't add the S&P into the mix? Is there any reason you can't look at crude oil and say, man, my rules aren't met. Let me go see if the S&P has something for me. And you'll get to that point to where that becomes easy. But whether it's S&P or crude oil, a termination is always a termination. And no momentum is always no momentum. And an area inside of triggers will always look like an area inside of triggers. So from the very basic, we grow. And I love that. And I love that that's a thing. And as you're growing, be okay making mistakes. The more mistakes you make and present, the quicker you're going to get to where you want to be. So guys, that's Ninja Trader. I drug it out a little bit. I like to go a little heavier on rules on Monday, but I say the same thing every day. So this is going to be the good recording that I'm going to lean you guys back to when I go through these rules a little quicker throughout the week so we can get to the live market. The other platform is TradingView. And John Novak chose to have indicators written for TradingView because TradingView is super solid and it doesn't crash. I've never had it crash. But in the stability, there are a couple programming challenges. We don't have fibs. And I would take fibs all day, every day. but there's an opportunity to get zones. And guys, these zones are areas of support and resistance based on historical things that have happened that you can project forward to determine where the market is likely to react. So instead of Fibonacci, you have zone. Instead of a one tick wide line, you may have a 20 tick wide zone. And guys, these zones are just like Fibonacci. Don't trade into them. They show you where decisions are being made. They show you where decisions have already been made, and you can learn to respect them. But the divergence highs and lows, one-to-ones, trigger lines, they're all the same, guys. It's 90% the same. The bar structure is different. And while minute bars are nothing new to Nexgen, guys, even our 2004 trading plan has, I'll show you a trend trade. This was the plan from 2004. Minute bars, notice they're all the same size. Pull back to a mid-band, close on the correct side of the triggers. This is from 2004. I'm about to teach you the exact same look here in 2025. So your 15-minute is your big chart. It's slow, guys. It's difficult it's damn near impossible to see change. You could have a 100-point run in one bar. But we're going to use it to define direction, momentum, targets, and terminations, the same way we do on NinjaTrader. And then your 1 minute defines immediate strength, and it's going to define entry points. And guys, I'm going to remind you one more time, I'm giving you the highest probability, lowest stress way to use this software as a brand new user so that you can get the confidence from success. To read the large chart, it's too slow for large triggers, guys. I'm sorry. If you keep your large triggers on there, you're giving your brain something to look at and form an opinion. If you keep the background colors on there, you're giving your brain something to look at and form an opinion. In the trading view plan that I give you, let me go back and find it real quick, and it's already been dropped in the room. In the trading view KISS plan, keep it simple plan, guys. It's a stepping stone. It's designed to optimize your chances of success as you learn to read your indicators. The workspaces right here eliminate all the noise. It takes the large triggers off, it takes the background colors off, and it makes it easier to stay focused on direction, momentum, and path. So direction is defined by the small triggers. And that's it. It's not background color. It's not their relationship to large triggers. It's just they're either up or they're down. And we had the lesson present itself this morning. Guys, if they are flat, if they are lifeless, if they are void of obvious direction, it means that the people in charge can't get their poop in a group. They don't know which way it's going to go. They're fighting it out. So if you see those flat triggers, guess what? If they can't decide direction, you don't really need to predict it, not as a new user. But once you say, okay, the triggers are up, the trend is up, I'm looking for long trades, you're going to go to the second step in reading your large chart, and that's asking yourself, where's the current price in relationship to the triggers? Where's the highlighted price in relationship to those small triggers? This is just an exploded view of this right here. And there's three places, guys. It's either going to be left, inside, or right. Those are the only three options. And if it's half left and half inside, call it inside. And if it's half inside and half right, call it to the right. Always downgrade, because where you are in relationship to those triggers is going to help you define your management. If you are left of the small triggers, guys, this is the strong side. This is the best of the best. This is the odds favorable momentum. This is where the market has the biggest push. This is where 1 minute areas are most likely to break. Most likely, not guaranteed. And again, I'm going to say it, trading directly into areas is the biggest provider of losing trades among Nexgen users that are new. So they're most likely to break. Doesn't mean they're going to break. Strong triggers doesn't mean 1 minute areas or 15-minute areas will break. It just means you're on the strong side. There's some momentum in the move. If you are to the right side of the triggers, this is the weak side of the triggers. Weak side of the triggers is where reversals typically come from. Weak side of the triggers are where 1 minute areas are most likely to create a bounce. It's aggressive, it's assertive, it's getting paid at areas because you know you're on the weak side. Location defines management. And guys, if you're in the transition side, and most of your trades will be, it means that I'm aware. It's not my absolute best look. This is where you might take quick profits, get to break even. And guys, you'll use where you are in relationship to these triggers to define your management plan. And then finally, the most important question, are there room to targets? Now, you're going to see in this room people that look like they make a career trading into areas, trading into termination conditions, trading into places that could stop the market. Those people have the ability to manage assertively. Those people have the ability to recognize the trouble, to understand the trouble, and to look for quick profits because they say to themselves, this is not the perfect trade. Just because you see people trading into termination conditions successfully does not mean you have to do it. There's too many trades outside of it. And I have room to targets on here because this is the biggest killer of accounts for new user. I don't want you guys to feel like you have to take chances to find success as a new user, but I want you to understand that when you can define direction, when you can understand the momentum, and when you have room to targets, you have the best of the best, that foundation to grow from. The first trade is the most common trade. The first trade is the trend trade, guys. And there's a lot of you that have built careers on the trend trade. There's a lot of you that have found great success with nothing but the perfect trend trade, not into areas on either chart, waiting for a pullback to an area and a close on the correct side of the triggers on the small chart. Now, what happens is you find this success, you get this success, and then your ego tells you that you can find success anywhere because you're so good at this easy, high probability trade, and then you start to waver, guys. So if this is going to be your core, make sure the rules are met every time. It starts with direction, it is followed by momentum, and then it is defined by room to targets. And then when the large chart says go look for a trade, if you just jumped in hoping it would break, if you just said, oh my gosh, it peaked its head, I'm going to get into this trade, and then suddenly things are going south, it's probably setting up the trend trade. Guys, the moment your small triggers on the large chart work their way inside of the large triggers, the moment the small triggers turn against the overall trend, the immediate strength is down. The immediate strength is against the long trade. You no longer have an edge. So you begin to look lower. You look for areas. You look for mid-bands, one-to-ones. You're looking for those supply and demand zones. And you're just going to say, because my trigger's rolled, I need to look lower, and I will take an up bar, a confirmation bar in the direction of my trade that closes, that finishes, that ends on the correct side of the triggers, the weak side of the triggers. It is one look to get you into a trend trade. And if you fight those small triggers, again, you're more likely to lose than win. This is your eating chicken 75% of the time. It's gonna be food poisoning. But if you just wait for the close on the correct side, you give yourself the probabilities. And then sure enough, weak sides where reversals happen, we're counting on that small chart reversal to take us to profits. Smalls are down, strong side, room to trouble. The moment the triggers roll against me and up, I have to look higher. My entry is a down bar with a close on the correct side, on the weak side of the triggers, guys. That's your trend trade. That's the most common trade. That is the trade that happens more often than any other trade. And let's see if we can find an example. Dun, dun, dun. Nope, they just railed it down, didn't they? But look at this, even against everything, the market didn't start down until it got a close on the correct side of the triggers. And then sure enough, even if there wasn't a rule met, that's exactly where the market started down. And although the sellers were waiting, they didn't pull it off till they got to the right side. And although the buyers were waiting, they couldn't push it up until they got to the right side. So that little bit of knowledge, guys, goes a long way. The next trade. This is the momentum trade, guys. This is where I want to remind you that this plan is designed to give you the highest chance of success, guys. And it says no terminations or zones on the 15-minute. Trading into areas is detrimental. It also says that the 15 are on the strong side. Now, guys, this is the best of the best. Having that best look for momentum on both charts. It doesn't mean that's the only way to take a momentum trade because momentum trades rely on that 1 minute strength. But this is how you take it with the highest chance of success. And then you're going to use a limit order to just buy a quick little snapback right to an area, guys. So when the smalls are up, when the market's on the strong side, when there's nothing in the way, your large chart has the greatest look ever to continue in the direction. And you're really just, and I'm going to draw some arrows. Well, there they are right there. You're not taking the head peak above the area. You're not taking the I hope it goes above the area. You're actually letting the market get away from that area and then snap back right to it. And because resistance behaves as support after the break, this becomes your entry for the momentum trade. It's a very fast trade. It's a low risk trade because if it blows through that zone you're hoping holds, those triggers probably rolled. And it probably turned into a trend trade with all those large chart advantages. Down, strong, room. Let the bar break away from the area. Not just peek its head above, but actually break away. And then when it snaps back with strong triggers, that becomes your entry. That's your momentum trade entry. Your stop is just beyond the zone. If it fails, if that market continues up with this look, it's probably going to turn into a trend trade somewhere higher. So learning the basics so that you can do more. Learning the basics so you can have an edge. Current, and look at how big you can make the chart to get the read. The small triggers are down. I'm on the strong side of the small triggers, but guys, I'm buried in a zone. I'm buried in an area that could stop the market. I don't have any room to a mid-band. There's not a lot of room to the next zone. I need some breathing room. I need some space to feel better. I need room to make money. And guys, we're going to go through the rest of the day, and we're going to talk about momentum, and we're going to talk about path, and we're going to talk about entry, and we're going to do it over and over. And the market just moves in patterns, and I'm going to do this. I love this when this sets up. Does everybody see a test on support, a little bit of a breach, and then a reversal? When I talk about the market moves in patterns, guys, I want to show you a picture from, I think, like 2020, maybe 2021, coming straight out of the, that's not what I wanted. I just wanted to go to the trading guide. And when you talk about termination conditions, guys, when you talk about entries, when you talk about momentum, when you talk about everything, it's just a pattern. It's something that's happened before. And because it's happened before, we can begin to anticipate. I hesitate to say predict. But when I see this pattern, big moves the other way happen quite often. So there's the exact same pattern, and now the market's moving up. And don't you think I'd feel better about that momentum trade coming from this look? Because that's the exact same pattern, 100%, that in 2021, John Novak felt so strongly about it, that he made it the basis for the pivot stop out. And guys, there it is. Does everybody see it? That is what we do. We have just described patterns that can be proven to win more than they lose, that create an edge, that give you an advantage, that creates confidence, that teaches you to read your indicators, and you learn this one little high probability pattern. So you can say, from a strong bottom, with strong triggers, with the potential to break, there may be opportunity to take the trade. But I know it's not high probability because the path isn't clear. And I know it's not my best look because the momentum is losing with divergence. And if I take this trade, I know what's good. I know what's bad. I know where my stop goes. I know I have to get paid quickly, because I'm gauging whether I enter or exit not on my emotions, my hopes, my desires, my wishes, but rather a very pragmatic approach to trading that simply describes a pattern. That's day trading, guys, probabilities. And that's my first hour. And I'm going to tell you, with 2 triggers through, it's not my best look. With divergence on the small chart and weak triggers, it's not my best look. Your plan says don't take that trade. Your plan may say something different, but my plan is designed to optimize your chances of success, to give you the highest chance of success. The one that I lay in this room every day, guys. Your KISS plan, here it is. Oop, that's trading view. Your KISS plan for Ninja Trader, for that potential to break trade, says 3 of the 4 triggers. It says no divergence. Why does it say it? Because that optimizes your chances of success. And guys, that would have been an avoidable loser. Does that make sense? And some of you are going, but Mark, sometimes it goes up from here. Sometimes that trade wins. And you're absolutely right. Sometimes that trade wins, guys. But, oh, I love this picture. This is one of my favorite pictures. Does it win more than it loses? Does trading and determination conditions result in more profits than losses? So Yapo, welcome to Nexgen. This is the live trading room, and I think that the name is a little bit misleading. This is the education room. I don't call trades. I talk about rules. I talk about advantages. I hand you a plan. I give you a way to study it. I give you feedback on everything that you present in the room. And if time allows, and we're watching the live market, and the most basic rules for entry are met, we will enter in this room. I'll take simulated trades. I will do it for the purpose of education. I will do it for the purpose of information. I don't call trades in the room. So I don't want you coming in here thinking that I'm going to say, hey, Yapo, here's your entry, take your trade. This is what you need to do. I will never, under any circumstances, tell you guys when to enter and exit trade. But I'll teach you how to recognize momentum. I'll teach you how to understand that 3 triggers through trouble is a very clear potential for a breakout. And you'll be able to define the perfect entry in an area inside of triggers. And I teach patterns. And Andy, man, that is a beautiful example of patterns. And all of the patterns that I teach are based on things that repeat themselves in the market. So did any of my S&P traders go long believing the market had to go up? I hope not, because your rules weren't met. Crazy, crazy. Welcome to the room, Yapo. So there is a path to getting to where you want to be sooner than later. There is a path to getting you to reading the indicators sooner than later. There is a path to helping you understand what it is you're looking at sooner than later. Learn the rules. I give the rules out every day. I give you spreadsheets. I give you trading plans. I teach you to read the indicators. And your job is to simulate, to practice, to post in the room, to simplify. I give you coaching, analysis rules. I'm here to help. But guys, now it's on you. Are you going to put the work in to become a confident trader? Are you going to put the work in to recognize when the rules are met? Are you going to put the work in to get the feedback to get to where you want to be faster? So before I take my break, I'm going to read what Victor said, or I will forget. Victor says, I don't know how to put this on a chart picture. I have seen 4 opportunities that would have lost. All of these opportunities had one thing in common: trouble at or close to price on either large or small chart. It was hard to keep my finger on the trigger and not pull it. I'm glad I observed and not reacted to my want to be in a trade. I just did not have all my ducks in a row. I think these 4 opportunities have taught me not all that glitters is gold. Unless my rules are met, do not enter. Not fighting small losers and then catch up is better than to enter mediocre trades and then sweating it all the way. And Victor, 100%. 100%. It's John. It is Chart Prime. Let me get you the link. So NinjaTrader is, and guys, I'm not going to talk any trash about NinjaTrader because I do like it. There are things that make it a little more unstable. There's ways to run your computer optimally to keep it running smooth. There's Chart Prime right there. If you decide to go with it, the Pro is more than enough, and they typically offer discounts. But one of the things John Novak's done to help you guys with NinjaTrader is in the user guide, there is best practices, getting your computer really in line for the best of the best, cleaning out. And if you find that you crash multiple times, like over the course of an hour, typically there's something corrupt within your workspace, and it's usually better just to build a new workspace. But it is Chart Prime for TradingView. And guys, remember, I don't have a stake in the game on which platform you're on. My job is to teach you to read the indicators, to recognize the advantages. You're welcome, John. And with no triggers below support, no matter how sexy that entry is, guys, my rules say don't do it. It's probably not my best shot. But just because I can't go short yet doesn't mean that I'm in a long. It just means that I'm in a little bit of a holding pattern. I'm waiting for the reaction. I want to see what they want to do, and then I'll make my decision based on what the large crowd tells me. And you chili doggers may have found a way to get paid right in that area, right? And you momentum traders found a way to get paid right in that area. Guys, that is the ultimate momentum trade right there. Down to trouble. And there's so much opportunity in the market, and it all stems from learning just a couple things: strong triggers, terminations, and entry. So I'll be back in just a few minutes, guys. Go stretch your legs. I'll leave you with the S&P. We'll see if the termination condition works. When I come back, we'll look at all the charts that were posted, and time permitting, guys, if the KISS plan rules are met when we're looking at a chart, we will enter, we will manage, we'll have a good time with it. But we'll go back and forth on what the large chart reads are. Smalls are below the large, but the large are down. I don't have a clear path because all of my triggers are above support. Rule number 2 is not met. Absolutely no trades into that area per the KISS plan. My smalls are up, but my large are down. I don't have momentum. I don't have a clear path up. I don't have a clear path down. How many mistakes can you make? How many hopeful trades? How many I wishes I wanted can you take in a market that just isn't giving it before you run out of money? Triggers are down, strong side of the triggers, and check this out. If I get a pullback over here, I could take a trade. But what I have to be aware of is the bottom of this zone. If they get north of that line, my entry has to come from below it. So, good stuff. So do me a favor, Aaron. Do me a favor. Put your read on it. Put your read on it. Tell me what you see. And then let's do that. Instead of me reading your charts for you, tell me how you read your charts. And we'll just line up and we'll go back to lessons. Does that make sense? How do you recognize when your rules are met? By recognizing your rules. So when you look at this chart, there's a couple things that I notice. The first one is your small chart's not even in line with your large chart. Does that make sense? Your small chart is historical. It's not even in line. But I'm going to show you how to recognize if your rules are met, and it's almost too easy. And this is my broken record thing. No worries. Aaron, the perfect trade. The ideal trade, the most awesome trade, the highest probability trade will have momentum, path, and entry. So here's what I want you to do. I want you to go back to your picture And I want you to identify these three things either being true or not true. Can you do that? And this is your core, because once you can do that, it's not a matter of how do I recognize when my rules are met. That answer becomes, because I see these three things, my rules are met. Or if it's for a different type of trade, because I see my checklist in completion, it's time to take a trade. So we'll come back to it. And then, guys, I'll be back in just a minute. Go stretch your legs. So I'm just excited about getting work done. Um, all right, Aaron, I'm going to go through a process, and this is for everybody. But I do love the question, how do I know when my rules are met? And I'm going to go through what I talk about on NinjaTrader every time I look for a trade. So, Aaron, I want you to at least consider this. You certainly don't have to, but I feel like this is a pretty safe bet. So on the most current bar, and guys, if you play along with me, especially if you're new, you'll be surprised at how quickly you get to where you want to be. So the first thing I do is I just ask myself, what direction is the market trending? And guys, I'm telling you, I'm doing this for a high probability trend trade right now. Everybody has a different plan. But there's only two options, guys, and it's either the market is up or down. So background color defines green is up, red is down. So which direction is the market trending on the most current bar on the large chart on this picture? What do you guys think? And if you're not sure, say, Mark, I don't know the difference between red and green. Is there a way for me to figure this out as a colorblind person, as a handy-capable individual? So, Aaron, up or down? Work with me here, man. I'm telling you. Guys, you guys that want to be wallflowers and still become professional traders, it's difficult. Nobody? It's up. It's green. There it is, right there. Without question, without hesitation, unequivocally, it is green and up. So what does that mean? My highest chance of success comes for looking for long trades. Now, the next question, I'm going through my checklist, guys. Do I have momentum? Do I have strong triggers? So what do you guys think? Do I have strong triggers up to trade with the trend? And if you're not sure, no, right? Because there's only one look for strong triggers up. Smalls above the large, space between, colors match, everything screaming. And there's only one look for momentum down. Smalls below the large, space between. Guys, and if you look at this trade and you answer no, I don't have momentum up, why on earth do you believe the market's going to push up? Well, if you do anyway, you have to ask yourself, do I have a clear path? And do I have a clear path up from here? Well, I guess I do. Because my triggers are up, but there's nothing pushing it. And then you've got to ask yourself, do I have an area for entry inside of triggers? And the answer is no, guys. I don't have a long trade entry. I didn't have a clear path. I don't have momentum pushing it. And what happens is you get to this point, if you go through this every time, what is my trend? Do I have momentum? Is there a clear path? No, John, I don't consider the triggers up. I considered the trend up because the background is green. My triggers were very much aiming down. So that's a conflict, right? So if the trend is up, but the triggers are down, that's a conflict. And even if I wanted to trade with the triggers, I didn't have a clear path, that's a conflict. So what happens, John, is there's an easiest way to do it. There really is. There's an easiest way to do it. And it's saying, first, what's the direction? Do I have momentum? Is there a clear path? Can I define an entry? And if you go through that mental checklist every time, if you go through that idea that the perfect trade, that the ideal trade, that the highest probability trade is momentum, path, and entry, what happens, guys, is you start saying things like, well, you know what? I don't really have momentum, or maybe the background is green, right? My background is green, but all of my indicators are down. And I'm coming from a termination, and you start to find more opportunities. And you say things like, well, if I get below that area, I might look for a short. Because this all said down, this said no longs, every indicator's aiming down. This is where you guys find those amazing jump-in trades with all the momentum and every indicator going the same direction. But it all stems from that very core understanding. What direction is my market going? Is there anything in the way? Can I define an entry to make the best trade? If not, I may have another entry. In a strong trending market, some people just sell the midband until it stops working. Have you guys ever seen that? In a market that's putting 30 bars in the same direction, if there's nothing in the way, just sell the midband till it doesn't work. And do you guys know that it will eventually not work? That eventually selling that mid-band isn't going to produce profits. And the trade that loses is the last trade. That's the last time I'll sell the mid-band, hoping it works. But once it goes down, I'll reduce risk. I'll take quick profits. Hell, and I might even say, in a strong trending market, well, I don't have any Fibonacci down there for a target. I'm just going to keep doing it until it doesn't work. And guys, that's not a high probability trend trade. That's an understanding of momentum assumed because of a strong trending market. Clear path clearly defined because price didn't reach. There's my mid band, and I have a plan that says sell it until it doesn't work. But it's not a high probability trend trade because it doesn't have an area inside of triggers. And guys, that's kind of the progression. And there we go. It didn't work. And now there's a reversal bar. The strong trend is over. So now I don't have momentum. I do have a clear path. I don't have an area inside of triggers. 2 out of 3 are gone. I'm obligated through chart reading to call it low probability. Do I want to jump in and hope? Or do I want to sit on my hands and wait for a better opportunity? Does that make sense, everybody? Everything you do can go back to these 3 things. And if it's not perfect, you choose whether or not you enter. You choose whether or not you take that trade. And guys, you got to live and die by your decisions. And if you are taking trades without advantages that lose more than they win, you're going to be able to identify it by going back to those core advantages, by going back to those 3 concepts, and you're going to begin to recognize situations where you say, that's not my best look. I choose not to take it. I love those when you guys post those. And some of you will say, I'll take it anyway because I'm really good at management. No surprise that I just pulled up Pete's. Pete's been with us for 10 years, guys, and Pete takes chances that you guys won't. And they're not chances in Pete's mind. They are Pete looking at his charts and stacking advantages versus disadvantages. Pete's looking at his chart and he's saying, okay, I see this is good and that is good and these are good and that is bad. And because I can look at my chart and I can say I have more good than bad, I choose to take this trade. I choose to manage this trade assertively. I go into this trade understanding that it's not the best trade, but it is still an opportunity. Does that make sense, everybody? Now here's the other side of that. This is the one that ticks people off. If you can't figure out how to take the best trade with the highest chance of success, if you can't take the perfect trade, if you can't recognize these very basic advantages yet, what makes you believe you're going to be successful in medium and low probabilities that are going to require your chart reading, your fast chart reading, your confident chart reading to manage them? I'm not harnessing you guys to the basic. What I'm doing is saying when you learn it, it's amazing how proficient you become. So Paul says 15-minute up, transition, room to trouble. There's your pullback to the zone. And Paul, you get a close above. There's your entry. You waited for the close. And you took profits at a target. 8 points later. $165 trade. Paul, it's perfect, right? Up, transition, room to the mid-band. And Paul, you got paid right at the mid-band, right at the divergence, right at the one-to-ones because it could stop the market. And $165. And how many of you in the room, and this is $165, I can't make $165 stretch. I can't live my life like that. This is one trade, guys. This is 2 minutes in Paul's life. Do it 4 times a day. There's that 6-figure again. Your account doesn't know how it got to 660, guys. You don't have to make all the move or all the money in one move. Market trades like 9 hours every day. 15's up, strong side, clear to trouble. Paul, Not a trend trade. There is no pullback. And I don't have any idea how far back that market pulled back. So what do we have? We have momentum pushing, right? We're above trouble. We have room to trouble. All indicators say up. And Paul says, I'm just going to jump the fudge in and see if they make trouble. Does that make sense, Paul? Not a trend trade. Not a pullback. Not a low pivot to hide behind. You're just saying, with every indicator up, I sure hope they get to that red line. Does that make sense, Paul? Now, here's one of the challenges. So watch this. I know without question that area can stop the market. Large chart targets. I got to that area. Large chart targets. Is there a reason to stay in that trade anymore? I don't have momentum to push it. I've reached trouble on both charts. No, but hope. Hope is a big part of trading for the new user as you go through your plans. And it's funny how you begin to recognize. So Paul, that's a 12-point difference. That's a $240 difference in that trade. Can you just make 480 and wait for the next trade? As a brand new user, you can't, because you firmly believe this is your last opportunity to ever make money again. The more time you spend in the market, guys, the more time you watch these patterns repeat, the more times you see the ups and the downs, you don't mind making $400 and just getting out, and you don't care what happens next. And Paul, you gave it a chance, right? Giving it a chance on the small chart makes sense when the large chart isn't trading smack dab into something that could end it. So those bigger holds, instead of hoping that the 15-minute breaks, let the 15-minute break. But if the 15-minute is wide open, it's the 1-minute charts, the 1-minute areas that you'll use that strong side to say, okay, I hope it breaks, right? I hope it does. I don't know if it will. And when this got up to 78, I'm right behind that zone. If it breaks, awesome. If it doesn't, I'm not giving back another $150 on that trade. Does that make sense, Paul? It's a great trade. Think a little management opportunity there. Just a little management opportunity. 15-minute up, strong side clear. I love that you put this on every chart. You never hesitate to talk about your advantages. You get in with the close above trouble. You get out at trouble. Easy 240. Beautiful trade. So let's look at it. 240, right? Hold on. 485, 500, 665. 665. Not trading into areas. 665. Trading with the large chart, finding a way on the small chart. Paul, it's outstanding, man. And then just because, why not add another 270, right? Everything says up, room to trouble, pulls back to the area, closes above, out at trouble. And let's see if there's management here, right? So you're in at 89. Awesome. Getting in perfect. There's your first sign of trouble, but because you're on the strong side, or you were transition, you're aware. This is where the small chart might say, hey, let's give that second contract a chance. Right? We've got room to the large chart trouble. Everything says up. I've already been paid. I can go risk-free on this one and just see if they want to rail. And because you're on the transition, you're monitoring trouble. It doesn't react. So let's hold for the next one. Great job, Paul. Awesome trading. All right, Victor. Trend trade. Triggers up. Price on the weak side. Space to the next trouble area on the large chart. Small chart. Price closes on the right side of the triggers. Tight space, or really no space, next to trouble area. I got what was there to be gotten, $60. I have set the stop loss on the yellow 1-to-1s, which is the area where the trade should not go. I would have taken advantage of the rest of the move. But again, you were going against trouble, which requires a ton of management and praying and hoping. So weak side, triggers up. Your entry just doesn't have anywhere to go. And that's the challenge, right? is there's just nowhere to go. And look at the reaction. Look at how far down it pushed. I don't think quick management's a problem there. And from the weak side of the triggers, Victor, this is where if you have this much trouble, and guys, this is for everybody. When you go into your trade and you say out loud, scare the dog, I'm on the weak side, 1 minute areas are most likely to create a bounce. Victor, from 52 to 58 is $120, right? Because you're on the weak side, because you see trouble, and you see a mid-band, a zone, one-to-ones, is it okay? Is it okay to give yourself permission to make a little over $200 on this trade and just wait for the next best opportunity? It's hard in the moment, right? Because there's that little what-if monster. What if it just breaks? What if it just runs? What if those weak triggers are the most amazing triggers ever this time? And it's about probabilities. And from the weak side, this is where just, man, make that money. There's more trades. 269 billion daily. You don't have to make it all at once. Smalls are flat and lifeless. You are on the strong side, but they're flat and lifeless. It's odds favorable momentum down, and they had already reached where they wanted to go. And guys, this is one of those opportunities where if your small triggers are lifeless and flat and indecisive, it's better to go with the small chart immediate momentum because the large chart's not giving you any, right? Triggers that are pointed to the right are not up or down. So let that small chart momentum help you out a little bit. It looked good from an entry standpoint, but you didn't have the large chart driving it. Does that make sense, Victor? And look at that. That's odds favorable down. Flat from a term. Good stuff. Guys, you got to take those. Look left, look left. I love it, Jen. This looks like one of my pictures. It held 7 times. The triggers are flat. Odds favorable down, and it goes down. And they're flat, and it's going up, right? And you're just like, oh, not yet. Sometimes there's just not a trade. Sometimes you're on the strong side, and you choose to trade directly into termination conditions, right? And this is interesting. And Pete, take this for what it is. This is more a lesson for new kids, I think. So your 15-minute zone was right here, and it held like a champ. And from your entry to the 15-minute zone, you had from 62 to 86. What is that? Oh my gosh, hold on. 62 to 86 is 24 points. Am I reading that right? 24 ticks. Either way, 24 ticks, 6 points, $300. And then from that zone, it drops down 4.5 points. It's a total of like 8 points against the trade. Trading directly into a zone. And you hold. And it gets right back to the zone. And it starts to dance. And you hold it. It gets to the outer band and it changes. And you hold. And it does. It goes to the outer band. And guys, you have to ask yourself, is that going to win more than it loses? What's so magical about the chart that you believe all of these zones are just going to break? And Pete, you had more going into it than you said. You said triggers up, price strong side. I can see that you entered, and I can see that you exited, right? Pete has his own management plan. I have absolutely no idea what it is. So this is just Pete doing great things and showing off, which I love. Because when you guys spend time with the software, you're going to see things. You're going to say, well, I can't go long anymore. I've got 3 divergences. I'm going to go short against everything that says up. And it works out, right? There it is. In the exact same price, when everything rolled and it pulled back to that fib, it's the exact same price without having to fight. And the exact same profits without all the headache. Nice trade there. But because he understands termination conditions, he knows to start looking the other way, looking for small chart change. Market reverses out of the middle of nowhere, odds favorable momentum. There's your pullback right to the areas inside it triggers, medium probability trade. And then when it all starts to continue down, Pete just jumps the fudge in, takes half off at 10, and manages assertively because he knows it's not the highest probability scenario, but he gets below trouble, he has room to trouble, he gets below trouble, he has room to trouble, and he manages assertively because it's not a high probability trade. Great job, Pete. Great management again. And guys, I will point out in the room, hey, you traded into this area. Hey, you traded without momentum. Hey, you did this, you did that. It's not to knock you down. It's to say, I want to make sure you know. I want to make sure you know that you didn't have that. I want to make sure that you know and that you manage assertively based on it. And guys, I'm Pete, gold star. Very few people manage as aggressively as you do. And you tend to know when it's okay to loosen the grip a little bit. And that's experience. That's, what is it? Time on the pond, right? That's just repetition of seeing the same darn thing over and over, creating expectations. So trend trade, late entry, flat triggers, Victor. Flat triggers, odds favorable, momentum up. Guys, this is the lesson for the day. We won't go into it deep. If you can't decide direction here, at least let the immediate strength on the small chart drive the direction of your trade. Does that make sense? This doesn't say up or down. This says we're probably going right. It's okay. And this says odds favorable, momentum up, which means that short is less likely to work. But if you traded with the strength, the long worked out beautifully. And guys, this is one of those things. When I can't tell, I choose nothing. It's not even counter because you can't define, right? So watch this. Does this blow up? Nope. Let's do this real quick, Victor. And maybe this will help. Are those triggers up or down, guys? What do you think? Let's take away the benefit of history. They're sideways. They're neither up nor down. This is where being in the now tends to pay dividends. I can't decide up or down. So what happens is you say, if I can't define direction, if I choose to take a trade, my advantage, my edge, my likelihood of success comes from trading with the small chart direction. Does that make sense, Victor? Perfect. I'm telling you guys, there's a million lessons in everything you guys do. Triggers rolled up. He was on the strong side of the triggers. Absolutely no room, I think. I don't know. He's in at 70, 68, 70, directly into a termination condition on the large chart multiple times over. So what he does, and I'm going to just do this again, guys. The triggers roll up, and he doesn't have even a resemblance of a clear path. I'll go with the small chart direction, with the small chart momentum, and he does. He just jumps in, trades directly into a bunch of areas, and makes it to the most extended area. Now here is where, and Pete, thank you for letting me use an example. Strong triggers down, room to trouble. Into an area with strength fails. Into an area with strength fails. Strong triggers just rolled up, strong side. Into areas with strength wins. And I posted this and posted this earlier. What I see is a 33% win rate on the same trade. And it doesn't, I'm not telling Pete, don't take the trade. What I'm telling Pete is just because you have strong triggers, I can't clearly define an edge because I base an edge on 20, 30 trades, not just one or two. And then Pete will make his own decisions because trading is an individual sport. But when I see it, I like to point it out and say, hey, I just want to make sure you're aware that it's down, strong side, nothing in the way, right? I'll try. And that's it. That's the Hail Mary. It's exactly the Hail Mary. And it worked this time. It's my experience that the Hail Mary works less than it doesn't. Small chart got past all the troubles. The bar closed on the right side of the triggers, but the large chart has a big green area of supply and demand right where price is. So this time, I said, no, 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 you evil trickster, not jumping in on that view. Not my trade. And it went up from there, didn't it, Victor? The market went up from there, didn't it? I remember because I looked at it. Awesome. So, Bejoy, do you have Snagit or Capture or some way to take a picture of your charts? That'll be the first one, is making sure that you have a way to do it. Microsoft has a free tool. You have a snipping tool. Perfect. So when you take your snipping tool, and is that the Microsoft snipping tool? I should probably download that so I'm more familiar with it. Cool. So after you take your picture, and I'm going to do it on Snagit, does it show you like a preview like this? Cool. Can you right click on it and hit copy and then come over to the room and click paste? Try that. And I'm not familiar with the snippet tool, so I'm not sure that, yeah, give it a go. That's probably going to be the easiest way to do it. And if anyone in the room is familiar with snipping, please throw your 2 cents in. So that's what you use, Victor. Is that how you do it? And then, Bejoy, are you on TradingView or NinjaTrader? What are you trying to share? Because, guys, if you're on TradingView, there's actually a camera right here that'll let you take the picture, download it, copy the link, open in a new tab. And TradingView has that right on there for you. And you can annotate your charts on the charts and then just do it like that if you want. And then, Bejoy, if I need to go download the snipping tool and see if I can get a little help for you, I will. But that'll have to happen after class. All right. Trina Trend Trade. That was her nickname in high school. Strong, 2 ticks from a blue fib. You're kind of caught. That area didn't break and it didn't quite make the new one. But everything is up. Everything is strong. Not a clear path though, Trina, right? It is very much only 2 triggers through. Top right-hand corner, Bejoy, there's a camera. No divergence, perfectly defined entry, out on the way to trouble, and then Trina, the only thing that you don't have is, see that giant red fib at 29 flat? I'm not sure why it's not on this chart. It should be. You should see that fib on this chart, even though when you didn't, when that divergence printed directly from that fib, that was your exit condition. No reason to go break even. You can see the area, and Trina, I'm going to use your chart as an example for everybody here. Guys, on your large chart, the workspaces have 3 time frames worth of fibs. They've got your small chart, your 21-3, which is a higher time frame, and then the native chart. And you know if they're synthetic from a different time frame because they don't print all the way. So Trina, it looks like for whatever reason your synthetics are showing up on your small chart, but they're not showing up on your large chart here. They did down here, and I don't know if you need to clean out. I don't know if it's a challenge with data. But do you see the big, so guys, if you ever see, and they're not because you had one at 26, actually that's the one at 26. The one at 27 is your 13.2. It could be due to tick replay, but I'm seeing synthetics, Sam. Trina, when I have it like this and I'm like, man, it's not printing the way I want it to, and you probably didn't recognize that it's not printing the way you want it to. One of the things that I'll do is I'll go to Tools and Database Management, and you have to do this with the workspaces closed, but I'll go ahead and reset and I will repair my database. And a lot of times this kind of gets you clear of anything that may be corrupt that might be creating challenges. So when I notice that I'm only getting partial synthetics, or the synthetics that are over here aren't showing up where I needed them to show up over there, I'll take a minute and knock that out. And for me, it just gives me a little confidence. But if you see a big red line, yeah, on your small chart, it does belong on your large chart. And it becomes a great target. But it's a beautiful trade. All that being said, it's a beautiful trade. You just could have gotten paid right at trouble or when divergence printed from trouble. And I know that you're still doing 100, 300, but you're at the point, you're good enough now to where you can start changing your management plan based on your ability to read the indicators. And Trina, you can start using the concept that you know that if price reaches a line and none of the triggers are through, what a great place to get paid, right? Even if it's not $300. Isn't it better to make 150 rather than hope? And you turn this $100 trade into a $250 trade. Does that make sense, Trina? Now you're at the point where your entries are so good, where your chart reads are so good, that now it's time to spend a little time on management, a little focus on management. And I think one of the biggest things you can do is, and there's two ways to do it, right? And I'm going to show you exactly what I mean. And this is how I began to work on my management. Because the large chart is odds favorable momentum and clear path, I will hold my first contract a little longer to trouble. I will, on my second contract, exit if. Boom, boom, boom. And that's where the management plan comes in. Now, because this is perfect, I'm holding for that red fib. And I'm going to break even, but I've already got it written out, defined. If I get divergence from that fib, right? If something changes, I'll exit that trade. And if nothing changes, I'll hold that second contract and look for a higher exit. Does that make sense, Trina? And I believe you're at that point. I believe you have amassed the skill set to get to that point. So when we work together, we'll start talking about these a little bit, right? Odds favorable, 3 triggers through, didn't really get the momentum, so you wait for confirmation, and then you enter again, and it made your first target. So Trina, this is where I love your pictures. And I love this. You went from, is it a strong? Well, let me just call it strong. And at this point, Trina, that's out of the equation. That, however, is a beautiful strong bottom. That, however, is a beautiful strong bottom. Does that make sense? This one's so far in history, who cares? Beautiful, beautiful. Everything says up. You've got 3 triggers through, so it's not a clear path. And Trina, you knew that. There's no doubt in my mind you knew that because you identified the divergence and said, that's not my best look, right? Only the potential to break, not my best look. Y'all, your annotations, guys, tell everything. They really do. That's why annotation's so important. Trina, you'll realize that you changed your opinion on the bottom to serve the trade. You'll realize that your annotation says a clear path to make you feel better about jumping in. I know, I've done it. Didn't have an area inside of triggers because if the reversal bar dissects it, who knows? I love the confirmation. Good stuff. But you have to believe with that divergence, it's less likely to go. You did get paid, absolutely beautiful. Break even, absolutely beautiful. But from 32 to 32.8, that's not a lot of room. Yeah, Cam, I think S&P and crude oil are the smoothest. It's the easiest place to learn your lessons and then take those and expand. They tend to be the most mild-tempered. Not a lot of room. Great management. Great management, Trina. It's a tight trade. Just something to think about. I always go back and look at my trades. And Trina, I always read what I wrote because sometimes I will. I'll say things. I'll say things that are untrue. I really will. I'll say things like, "Hey, um, it's untrue." So, momentum, strong trending market, clear path. I disagree. Oh no, I don't disagree. I apologize. You've got all four triggers below and you've got room to trouble. So Trina, you just jump the fudge in, hoping it goes, right? You sit through a giant loss of momentum, but you're letting the large chart lead the way. It goes right to where the market was most likely to go. And then Trina, there's that divergence from a Fibonacci area again. There it is again. Does it make sense to give back all that money when you can see that giant fib right there? That's the next step in management for you. And I think you're going to start to see some crazy differences in your P&L. There's a reason to go break even and hold. There is. But there's also reasons to not just let it hit your break even. Divergence from a fib, second higher divergence. Divergence from 1 to 1. So now you're going to start incorporating those very simple management concepts that you had, and they're going to start to just grow into more. So exit conditions. And this is why naming your trades becomes important. If I'm in a high probability trend trade, my initial exit is the KISS plan. But there's more to get me out. If I'm in a 50-50 trade, first it's the KISS plan. But then there's more to get me out if it's a momentum trade. So when you name your trades, you know exactly how you're going to manage it. And when you look at the KISS plan, Trina, it says right on the plan, you will create your own management plan based on your ability to read the indicators. And you have certainly graduated to that point. So the trend is up. There's nowhere to go. I'm sitting on my hands. That's how fast the read happens. And I think we've got two more. All right, Pete, all the momentum, nothing in the way, jump the fudge in, get out of trouble. Guys, this is the chili dog. This is that plan that I dropped in the room. When you have all the momentum, Swathy, do you see it? There wasn't a pullback, but because of recognition of momentum and path, Pete just jumps in and says, man, if I don't get the pullback, it's probably going to the fib. If I do get the pullback, I can define my trend trade. I hope that makes sense to you guys. Great trade, Pete. Guys, that is how you capitalize on those first two concepts. Oops. All right, Aaron. Did you have momentum? Yes. Did you have a clear path? Yes, from 26,140. Did you have a pullback to areas inside of triggers? Aaron, what do you think? Not quite, right? I've got momentum. There's nothing in the way, but I don't have an area inside of triggers. So why would you enter at 26,140? Watch this. And this is true on NASDAQ. And Aaron, I'm going to tell you right now, learning to trade on the NASDAQ is like, I don't know, learning to swim in a pool full of piranhas with a toe cut off. NASDAQ is absolutely psychotic. And if you're not comfortable with your rules yet, there's a lot of things on the NASDAQ that are a little bit different that are going to 100% eat your lunch. But because I have momentum and because my path is clear, if the market gives me a reversal bar from the areas that are not inside of triggers, I'll try. Does that make sense, Aaron? But now we've got a problem because that was the exact same thing. And that was the exact same thing. So how do you determine when to take that trade? Well, you could say, I'll let my large triggers roll because I can't take it up here with everything green. Or you say, my small triggers have to break through the area and I can pull back. I take a close on the correct side. There's ways to take this trade, Aaron. But as a brand new user, there is no high probability trend trade entry. There was no pullback. But where you pointed your entry, did you notice that it's on the weak side of the triggers? That where you pointed out getting into that trade was a close below those small triggers, and you never got that close here. So what you did is you said, okay, the buyers tried. Everything about this chart says down. Let me get to the weak side of the smalls before I give it a go. Aaron, I like it. I really do. But does it fit a rule? I'm obligated to say no. 100% no. You don't have an entry. So when you say entry point 26,140, I want to know what you see. What made you want to take that entry? I know that it was because of momentum and path, but how did you define that spot specifically? How do we make it repeatable? How do we make it something that you can prove wins more than it loses? And how do you manage it? Those are the questions that you'll ask. Large chart led the way. You found a way on the small chart. That's what good chart readers do. Nicely done. Does all that make sense? And then the other question is, do I have to find the medium probability entries as a brand new user? And I mean, your stop would go above it. You're on the weak side. You have the advantages. Everything's pointed down. I mean, I really do. I love everything about the trade. And I like the patience for the entry. So write out your entry rules to get you into that. When I have momentum and path, but I can't define an entry, what's going to get me in? A reversal bar in the direction of my trade. On the NASDAQ, a close below the small triggers that are against my trade. That's pretty brilliant. Because once you're here, that market's going down until you get a close on the other side of those triggers. Great job, Aaron. Does all that make sense? Good? Good stuff, man. I like it. And the large chart read is great. The large chart read is spot on. And man, when I see momentum and path, I get excited the same way you do. And then we just got to define that entry that gives us the highest chance of success. And I think you did a good job with it. All right, Nathan. 3 triggers past fib. Is this trade okay despite the lack of a strong bottom? I don't know. Is it okay for me to let a rattlesnake bite me because I've been bitten 1,000 times and I have I don't know. I can't answer it, Nathan. So I've gotta answer the question with a question. What does your plan say? What does your plan say? Do you have to have a strong bottom to take that trade? If your plan says yes, then no, it's not okay. But are you ready for the good stuff, Nathan? You're struggling to define a strong bottom. That's the challenge that I see on this trade. It has nothing to do with the trade itself. What you have forgotten, or perhaps didn't even know, is that a strong bottom means that price reaches an area and none of the triggers break, and then it reverses the market. And Nathan, price reached Fibonacci support, none of the triggers broke, and it reversed the market. You had a strong bottom, which made this trade even more likely to win. Does that make sense? Cool. One divergence, man, that could jack up this trade. That one divergence is notorious for killing 50-50 trades. But because you had the strong bottom, it gives you a fighting chance. Because you had the great entry, actually the late entry, it gives you a fighting chance. Because you managed at trouble on a 50-50 trade, it gives you a fighting chance. So it's a beautiful entry. It's great management. And you actually had an advantage you didn't even know about. Great job, Nathan. It's a great looking trade. Medium probability, manage assertively. You did everything a confident, intelligent trader would do. And now you have that little something something, right? Now I'm never going to miss a strong top or bottom because Mark dropped that picture in there and I'm going to steal it. And I'm going to look at it for a couple days to commit it to memory. Great job, dude. Once again, everything is screaming. The momentum is there. The path is clear. The jump in is real. The profits are established. Life is good and children are singing songs about Pete. High probability trend trade is not the only trade. High probability trend trade opens the doors for you to see more opportunity. And Pete waited for trouble to break. He gets in on the happy side of trouble. And he's out before the next trouble's reached. Great job, Pete. So guys, that's it. That's all the pictures. Let's go to the live market real quick and do a couple reads. All right, and we're going to do it like this because I think this is the easiest way to do it. I'm going to do this two ways. I'm going to give you this is how you're going to read it 30 days from now. The trend is down. I have momentum. There's nowhere to go. I'm not even going to look at this market. That's it. I'm not even going to look at that. And I'm not going to get sucked into a trade with nowhere to go. The same way I didn't get sucked into a trade with nowhere to go. Guys, that's how your chart read's going to go. But the trend is down. Does everybody see it? The background is red. The smalls are below the large, but the large are not wide. Price reached yellow 1-to-1s. All the triggers are above. Price reached Fibonacci support. All the triggers are above, going back to the language. No matter what my opinion is, if I got in at this mid-band, I probably got slaughtered. And I'm trying to figure out why. It's because I traded into a termination condition, guys, and you will lose more of those than you win. Because a termination condition can stop the market. It can reverse the market. It can create a strong bottom and give you all the momentum that lets Pete capitalize on it as the market is screaming up. Trading view. Oh, there's those damn indecisive triggers. Not really up, not really down. Do you guys see it? Small chart, not really up, not really down. But the smalls are above the large. That's the only inkling of a suggestion that they may want to go up, but there's nowhere to go. And you guys have 12 minutes before you know if these are going to be up or down triggers. And if you try to guess whether these are going to be up or down based on what's happening right now, remember that a lot can happen in 15 minutes. So if you're taking it based on the now, let the 1 minute support the direction you choose. Does that make sense, everybody? For me, that's a no trade scenario. That's a kick back and wait, do nothing, relax. The next one's coming. This is up. This is strong. This is all of the room I could ever hope for. Where's the actual market? This is nowhere to go. So what do I need? I need the market to go up and pull back. I already know what I have to have. Just not there yet. Weak triggers, they tried and didn't. Whoa! But the trend is down. Why did it go up? Because a termination pushed it up. Right into a termination. Guys, rule number 2 is going to keep you out of the shenanigans that the market loves to produce. Rule number 2 eliminates hope. Not in a bad way. Not like being hopeful is wonderful. In trading, it costs money. So does everybody see I don't have momentum? I don't have a clear path. These are green. That is red. I can't find something that says, hey, guess what? We line up. We're good. So let's talk about what's next. Well, if I get above this area, if it produces momentum, I've got nothing but room up to 68.97. Do you guys see it? If they can get above, if they can create momentum, I'll look for a trade somewhere in here. But until they get above this area that I see that has stopped the market, that has created a giant fight, why would I? You are in your 90%, my friends. You are in your 90%. You don't have momentum or path. If you took a long trade, you are relying on hope at this point. All right. I'm going to take just a minute because my water's empty. I want to see something. Microsoft snipping tool. Microsoft Store. Download. Install. So Bejoy, we're going to see if we can help you out, my friend. And the snipping tool is rated E for everyone, which is awesome. Press window logo key, Shift S to start a snip. I like that. How cool is that? So press Windows logo key, Shift S. Oh. And now I can click and drag. And when I click and drag, there's my snipping tool. Press Windows logo key. Okay, so that's a recording. There's a new picture. So I'm trying to figure out, there we go. Oops, I don't want a recording though. I want, oops, a picture. So Bejoy, are you in here? I need to make sure it's a picture. I'm gonna click new. I'm gonna click and drag. There we go. And it gives me the picture. So from the snipping tool, let's see what we have. I can highlight things. I can erase stuff maybe. I can do boxes. I can probably do squares. I'm sure there's a way to change that. There we go. Boxes, window, full screen. I can cut and annotate. Is there a way to text actions? Ooh, I love text actions. Ooh, I don't know what that means. Oh, that's actually looking on the picture, so probably don't need that. Is there a way to add text into you can edit in Paint, and if you click Edit in Paint, you can add text. So you could go through and annotate your chart like that, but let's see. So from here, if I right click and click copy, and I come over and look at that, Bejoy, I can paste right in. And then you can also take images of Snagit. Yeah, so Cam, one of the worst things is wanting to take a picture of something you did on Snagit and you can't, right? So Bejoy, that was a 2-second download. Go through and play with it, but you can copy. But it looks like to add text, you may have to go edit and paste. And your screenshots are automatically saved to your screenshot folder. And let's see what this is. I don't know what that is. That's the one where you can share it. Oh, look at this. Uh-oh. Uh-oh. There's my screenshot. I wonder if there's a way to add it. Nope. I don't know how you can get the link to it, but you can copy paste. So when you copy paste, you can either right click and just hit paste. If that doesn't work for you, you have to hold down Control and then hit V, and that will paste into the room. So I can paste my picture in, or I can Control V and it'll automatically put the picture in. And guys, if you have trouble posting pictures in my room, do what Bejoy did. Tell me. And we'll take a second and figure it out. But now I've got the snipping tool, and I'm feeling pretty cool. So, Bejoy, now I expect to see some good stuff from you. All right, guys, I'm going to take just a minute. I have to refill my water real quick. We got about 30 more minutes. So if you have a question, if you have a chart read, if you need help with something, or if you just want to talk about the world we live in, guys, I got you. I'll be back in like 2 minutes. Home stretch. You guys remember when we said, hey, the market moves in patterns? And I went and I found that pattern from 2021 that lined up with the pattern from 2025 on the S&P, and now here is the exact same pattern going the other direction on the S&P. Area, back to area, pivot, stop out, more down, area, back to area. Guys, the market does the same darn thing over and over and over, and I can't stress that enough. And once you start to get in tune with what you're seeing, when you start getting in tune with the idea that you can almost predict what the market's going to do based on the pattern it's presenting, it creates an edge. No shorts, no longs, no longs, no shorts. Now what happens here is the new trader says, where's my entry? The market's going up and down, where's my entry? The confident trader, the mature trader, the experienced trader says, I can't find an edge. I can't find a clear path, so these are my options. It either has to break above this area that's held twice, or it has to break below this area that's held twice, because there are forces in play that can't figure it out, and they're gonna fight. And we know exactly where their fight is most likely to happen. And that's what I want you guys to believe, is that when you learn to read your indicators, you know where the market is likely to stop. You can identify with all that momentum and path where the market is likely to go. And the word likely is key. It's not guaranteed to go. It's not guaranteed to stop. But when you start thinking in those terms, guys, you realize that the easiest trades that you'll ever take revolve around momentum and path. Whether it's high probability trend trade, whether it's a momentum trade, whether it's just a jump the fudge in trade. So many of you guys do that. But it's all rooted in momentum and path. Learn those two things. Give yourself that advantage. You'll be floored at how many losers you avoid. You'll be floored at how many winners you can find, and you will be floored at how often you do absolutely nothing. Weak triggers, clear path, no areas inside of triggers. 1 for 3, guys. Anybody want to bet the pink slip on their AMC Pacer against the guy with the Camaro? Probably not. All right, guys, what do we want to talk about? Triggers are up. We've had a close on the correct side. It does have room to trouble. Check it out. If you entered on the right side of the small triggers, your stop goes below the pivot low. Not a lot of room to get to trouble. We'll see what happens. Whew, man. Triggers were down. There was your close below trouble and the triggers. From 72 to 55. That's about 340 per contract right there. That's not so bad. And you know exactly where the market could stop. And then you have to make a decision if you want to get paid there or if you want to hope it breaks. Anybody catch that one? There's a few of you I know that like that look. There was your pullback. No room, no room, no room, no room. Finally room. And down it goes. And now we're into trouble. All right, guys, what do you want to talk about? We've got 30 minutes. We've got 30 minutes. And my whole idea is that I want to help. How can I help you? Oh, you know what we'll do? What's your thing? People's things. Most of you are going to say patience. You don't have to answer in the room. What keeps you from consistency? I bet 90% of the room will say patience. I can't seem to sit still, Mark. I can't seem to sit still. I want to be patient, but I'm not. I don't want to trade in termination conditions, but if I don't, I'll never get a trade. The market will never do anything. So how do you build patience? By trusting a pattern. By learning a pattern. By proving the pattern wins more than it loses. Did you guys know that every time you take a high probability trend trade, you're more likely to win than lose? That every time you enter with momentum and path, you're more likely to win than lose. But you're never guaranteed. Which means that you've got to trust the pattern enough to not hesitate. Electric freaking shock therapy. We'll hook you up to a car battery, Victor. And guys, sometimes, and here's the part that really throws a wrench in for a lot of people. This is the one that freaks people out. And we're going to use Pete's for an example because you guys have seen what Pete's capable of. With momentum, with a clear path, with the perfect entry, it produces a loser. And guys, if you're new, you're going to wonder what you did wrong. So Aaron, are you still in here? If you're brand new, you're going to wonder what you did wrong. And you're like, oh man, I finally learned my rules. I got them. I defined them. I know them. I can identify them in a moment's time. So if you go back and you lose a trade and you say, I did without question have momentum. Without hesitation, my path was clear. With no uncertainty, I defined an area inside of triggers. You'll literally get to a point to where you'll say, this wins more than it loses, but it will lose. I don't care about the result. because losses are a normal part of a positive equity curve. I care about the execution of the method. And that's a little Mark Douglas there. It's the execution of the method. It's doing the same thing every time. I just destroyed your position on crude oil? Are you sure? That was me? So Aaron, when the trade is over, let's go look at it, right? You had one of three, and you're taking a beating. That's good. Get tired of losing. But does that all make sense, guys? There will be times when it's absolutely perfect, 100%, and you're still going to lose. So you can focus on at least giving yourself that advantage, the edge, right? All right, Bejoy. So Bejoy, this is awesome. So you're telling me that when the market is up, when the market is strong, you're going to go long. Why? So Bejoy, why? Destroyed as in dismantled. I got you. Guys, I love it. I love it when you post in my room. This tells me nothing. This tells me nothing. So, Bejoy, what I ask, this is so important to me. If you're going to present with TradingView in my room, there's things that I ask of you. And the first thing is that you tell me the direction the market is going, that you tell me where you are in relationship to those triggers, tell me if you had room on the large chart, and then when you enter, I appreciate very much if you tell me why you did what you did, why you entered where you did. I like that you're going up and it's going up, and I like that it's clear and it's clear, and you're on the strong side, and that's amazing, right? Why did you choose that spot for entry? Why did you choose to get in against smalls and large against you from the wrong side of the smalls, right into an outer band? And if you talk about this with me, what happens is I can say things like, hey, when those small triggers roll, very often it goes lower, right? You're looking for the mid band. Okay, so you were just making sure that you could do it? No worries, yeah. Well, welcome to my room, Bejoy. I talk about everything I see, without a doubt. I am trained to do that. All right, there's your HVA trade. But it's all repetition, and it's all the same thing, and it's all over and over. So momentum, right? Not a clear path. So with momentum and no clear path, if you chose to take the trade, you probably lost it. The momentum is there. The clear path is not. And guys, this market is trying to get through 1, 2, 3 areas. If you chose to enter, you entered without a clear path, and it didn't work. It was a medium probability trade that you could take and manage. And now let's go to the other side of it. And Aaron, I don't know if this is the trade that you were taking. Watch this. Because I know my path is not clear, and it's only 2 triggers through 3 different areas, I will force, demand, insist the small chart give me a reversal bar from the areas before I attempt. And this is my right? This isn't just 2 triggers through. Guys, this is a big range. That's a 3-point range that I'm hoping the market breaks. And everything else is perfect. It's a strong bottom. It's the potential to break. It's a lot of momentum. It's areas inside of triggers, but it isn't perfect. So if I force the market to give me a reversal bar, good stuff, right? Divergence might take me out. And now I'm looking for like a continuation look. But it goes back to the idea that you're in control. You're in control. It's not perfect. They're going to have to give me what I want. But Joy, you're familiar with NinjaTrader, still get confused when you see the charts on TradingView. Would you help simplify it for me? You may have addressed it before in your classes. So you please share the link so I may go over it to understand the triggers in TradingView. Absolutely, Bejoy. Ask and ye shall receive. And I'm going to do it like this, man. I'm just going to go back to what I teach in the morning. Instead of giving you a link, we have time. There's no questions. Let's give you the live example. So on TradingView, I think that the most important thing to remember about TradingView, whoops, that's not where I wanted to start. My apologies, guys. I hope nobody gets sick from the going through. There we go. I think that the most important thing to remember about TradingView, especially you guys that are used to Renko, is that it's not Renko. Is that it is a 15-minute bar is your large chart, and Bejoy, 1,000 things happen in 15 minutes. So one of the things that I did in the TradingView KISS plan is if you want to take a lot of the noise off, and I think you did, didn't you? No, you didn't yet. So if you want to take a lot of the noise off, in the plan is very minimalistic workspaces. And in the plan, the workspaces, I'll drop the plan in the room as well for you. The workspaces get rid of large triggers. The workspaces get rid of background color on both charts, but large triggers on the large chart. Because 15 minutes takes so stinking long to produce a bar that those large triggers, they're just irrelevant. They're too slow to give great information for day trading. Does that make sense, Bejoy? So you can make it a lot easier by taking that very simple workspace. And then your 15-minute still defines direction, momentum, key targets, and terminations. But because it's such a big chart, we're not using price reaches, where are my triggers. That's a Renko thing. You're literally just saying from my entry point, do I have room to targets? That's it. So to read the large chart, and if you want, let me put this, well, this is all in the plan. So all of this is identified in the plan. There's links to the pictures in the plan as well. Either the small triggers are up or down. That's the first thing. Doesn't matter background color, doesn't matter what the large triggers are doing. It's simply if they're angled up, looking for longs. If they're angled down, looking for shorts. And then because it's so slow, the next question, and guys, I am a systems and routines kind of guy. Where is the most current price? Do you see the highlighted price? It's either going to be left of, inside, or right of the triggers. So live chart example. Live chart, large triggers are pointed up, and you can draw with your imagination. When they're up, whoops, right off of the top line of the triggers, you could draw a line. Am I left of it? Am I inside of them? Am I below it? If you're left, it is the strong side of the triggers. This is that odds favorable, best of the best, bigger moves when there's nothing in the way. 1 minute areas are most likely to break. If you're to the right side of the triggers, that's the weak side. That's where reversals come from. That's not the strongest push. That's anything can happen. So if you're taking a trade, management becomes very, very assertive. And then more often than not, you're in the transition side, where price is literally not really above and not really below. And this is where you're like, okay, I'll take partial profits, get to break even, but let's see what that market can do. Because in one bar, you can go from the weak side to the transition side to the strong side and vice versa. So this lets you know, Bejoy, how you're going to manage. Does it need to be a little looser, super assertive, or are we just going to kind of ride it out, take profits, go break even? And then the question is there room to targets? From where I want to take a trade, is there room to get to trouble? And this is your large chart read. So first direction, then momentum, then path, just like NinjaTrader. And then there's two types of entries that happen on TradingView. One of them is what we call a momentum style entry, where you have those strong triggers, the area breaks, it pulls back, and off it goes. It's the same momentum trade that Nexgen's been teaching for 20 years. Let it break, let it pull back. As long as you have strength, get in and go. The second entry, and the most common entry, Bajoy, so you're used to the idea, buy or sell a pullback at an area inside of triggers. And this is the one that gets people transitioning from NinjaTrader over to TradingView, is they want to just get in at that mid-band. They want to just enter the market. But what happens is, because this 1 minute is a slow-moving chart, guys, the same way on the large chart, we talk about the idea that reversals come from the weak side. Did everybody hear that when I said it? Reversals come from the weak side of those small triggers on both charts. Your trend trade entry has you waiting for a bar to close on the weak side of those triggers from an area. And what happens is you're trading with the large chart. So if the large chart is up, even from transition with room to targets, the moment your small triggers turn against you, Bajoy, it's wait for a pullback to an area, take an up bar that finishes, that closes, that ends, that is no longer active, and it closes on the correct side or the weak side of those triggers. And that's your trend trade entry. That's going to be about 90% of your trades on TradingView. And in the plan, there's a checklist. Don't trade into areas. Please don't trade into areas. Make sure you wait for that correct side of the triggers. And that's TradingView. I think that it is, I won't say an easier plan, but TradingView demands a level of, here, watch. The triggers are up. I'm on the strong side of the triggers, and I have room to trouble. I have room to the midband. There was my pullback to the midband to a zone. This bar represents the close on the correct side of the triggers. I can put my stop below the pivot low. I can put my profit targets at trouble. But that would be the idea, is first it's the large chart leading the way, and then it's just finding a way on the small chart. Being conservative, waiting for being on the correct side of the triggers, making sure that you have room to trouble. And you'll find that these trades just repeat themselves all day long. And if you didn't wait for a close on the correct side, you got caught up in a lot of nonsense and a lot of shenanigans and a lot of no funnery, if you will. Weak momentum, thought it was still enough. The red fib above printed after I entered the position. It didn't. It didn't, Aaron. That red fib printed at 9 a.m. is when it started. So it probably actually came in about 9:02, 9:03, but it had been there for 10 minutes, but you were so focused on this you didn't notice it, and that's okay. So no momentum, clear path. Weak momentum, thought I had a clear path. You did. Entry was jumping in after the market was literally going up forever, and I entered at the completely wrong time again. I was waiting for the pullback, and it just kept going up after that mini pullback. So I didn't wait long enough. I thought it was going to continue up. I love it. No worries. You had tons of room, Aaron. You did. You had all the room in the world. The one thing that you didn't have is the entry defined, and you didn't have momentum to push it, right? And what helps the market continue up? Momentum, right? So if you're just going to jump in, Aaron, and this is where you'll have to make faster decisions. If I'm just going to jump in, doesn't it make more sense to jump in down here where I still have momentum, where I just break the area? Because then there's probably a little more time before the reaction. If I jump in here with weak triggers and I have weak triggers here, you'll never know. I just can't stress that enough, Aaron. You'll never know. You'll never know if it's going to reverse on you. Ever. In a million years, you'll never know. You're struggling with not being in charge, right? You're struggling with not being able to dictate what the market does. And that's why we wait. And that's where the patterns come in, Aaron. And I love that you said that. I want you to do something. Will you do this for me this afternoon, Aaron? Go through the spreadsheet and just pick 10. And I want you to see something awesome. Momentum, potential to break, pull back to an area inside of triggers. Do you see it? Easy money. Now we're going to go even further. Momentum and path, pull back to an area inside of triggers. Momentum, potential to break, pull back to an area inside of triggers. Momentum, potential to break, pull back to an area inside of triggers. Why is Mark doing this? Well, momentum, path, pull back to an area inside of triggers. Momentum, potential to break, pull back to an area inside of triggers. Momentum, potential to break, pull back to an area inside of triggers. And the reason that I'm doing this, Aaron, is because you haven't built the trust yet. And that's okay. And that's okay because you're new and you're excited and you know that there is a metric shit ton of money to be made as a day trader, right? And you hate the idea of missing it. But, however, the market moves in patterns. And when you begin to trust the idea that with momentum, path, and an entry, don't put yourself under that pressure. You can't make the market ever do anything, but you can begin to recognize that same damn pattern that keeps showing up. And what happens is the more you learn to wait for that pattern, the more calm you become, the more patient you become. And I have a picture. And Aaron, I'm going to say this right now. Anyone in here that says that they haven't been right where you are is probably lying or untruthing. I don't want to call anybody a liar. That's not cool. But I want you to see something. And so much that I even made this picture, Aaron. Brand new users jump in right here all the time. That's how I knew to make this picture. All they've done is created huge risk and short targets. And then they get in on the head fake. And it's huge risk and short targets. And then eventually, through study, they begin to wait for the right entry. So one of the ways you can do that, click on these and look at that pattern. But even more importantly, I want to show you something. I'm going to open up the small chart. This is crude oil. With the exception of the two straight lines, the down and the up, do you see how much that market oscillates, how much that market goes and stops and goes and stops and goes and stops? And it happens like all day long. Here's the S&P. Open up the small chart. This is for the entire day. Hold on, still not there. I'm about to crash my chart from doing it. This is the whole day, Aaron. And every time you think the market's going without you, it's probably not. But it takes time to develop that trust. Cam says he's the poster child for what you're experiencing. So when I tell you guys, stop looking for the trades as a brand new user. Look for the advantages, learn the patterns. What happens is Aaron, there is a wealth of opportunity outside of the high probability trend trade. But what happens when you start putting the pressure on the market to continue in the direction of the trend without momentum, you're creating unrealistic expectations. When you create the expectation of the market to just arbitrarily go up, when your indicators are telling you that it's losing momentum and probably going to push down a little bit, that's not fair for you or the market. And there's this idea that Mark Douglas, have you seen Mark Douglas, Aaron? Have you ever gone and looked and watched any of his videos or anything? Freaking brilliant. And John Novak worked with him a lot before his passing. And there's some things, and this is it right here. When you believe you know what's going to happen, you set yourself up for failure when you take a loss. When you believe that the market should go up, you set yourself up for failure when it doesn't. When you believe your trade should win, you set yourself up for failure when it doesn't win. And when you don't care what happens, that this trade doesn't matter, it's a collection of trades, not one trade at a time, it is so liberating. It is so freeing. So the focus is to do the same thing over and over, to do the same thing. And Aaron, you love to jump in, but jumping in without momentum loses more than it wins. Does that make sense? Jumping in without the advantage of momentum loses more than it wins, which means that every time you say you think it's still enough, you're creating an unrealistic expectation. But if you say, I don't have the momentum to push, I'm just going to sit tight till it's there, you'll be amazed at how many opportunities begin to present themselves. And that's where you're at right now. You're learning to create a separation between what you want to have happen and what your indicators are saying is most likely to happen. And I'm going to tell you again, brother, you are right where you're supposed to be as a new user. But eventually, with momentum and path and a pullback to an area inside of triggers, you'll find a way to make some money. And let me show you what Boaz did here. Boaz said, it's momentum, not quite a clear path, but his small chart had all the momentum he needed, and it gives a perfectly defined entry, and he rides that momentum down. And it's all going back to momentum and path. Hey, Trina, have a good one. Great trading today. And Trina, I do want to throw out there, when I tell people, hey, it's time to work on management, if you ever need to reach out and share pictures and you're brainstorming, please don't hesitate. I love helping you guys. I really do. I won't tell you what to do, but I'll certainly share everything I have in the arsenal to help you do it better. Great trade, Boaz. Great trade. And Aaron, I'm fearful to jump in when my gut says to, because the market keeps going up and up and up until I'm like, okay, let's do it. And then by that point, it reverses on me. And it's true. Aaron, I've been there too. I guess like you just said, it comes from not reading your indicators and the charts correctly. And what sucks, Aaron, and I'm going to just go ahead and say that it sucks, is there will be times that for no reason at all, without momentum, the market just rails because people put a ton of money into it. And when it does, that's where it's the momentum on both charts. And let's just see. So I'm going to put a square just in this area right here with all the momentum and nothing but a midband in the way. And the midband's only a termination if the large triggers are a full bar away. So if we come back to the small chart, and watch this. Aaron, this is that chili dog trade. If you say, I'm going to let everything on the small chart clear with momentum, I'll see if the momentum pushes me to this point on the large chart. And that's it. That's all you're saying. Is because of momentum and path, let's see if I can grab a little bit. And I'll stop right there, right? And if I don't have the momentum, the separation, I have to wait for a trend trade. So you give yourself two options, right? I know the trend trade is my best option. If I'm going to jump in hoping that the market goes, momentum is going to be my driving force. And if my trade fails, I have to have an area inside of triggers to support it. So if my fearful jump in trade fails, I have to have a trend trade entry to go with that momentum and path. Does that make sense, Aaron? And if I don't, and here we go, let's go back to your picture. And this all comes together through repetition. If I don't have a rules-based entry, when I get this close on the wrong side of the triggers, I have to exit that trade because I can't define my next entry. So when you know the best entry, it opens the door for the rest of the entries. And you're caught in that new user scenario where you want the money so badly that it just aggravates you if the market doesn't give it to you when you want it. And it's very much waiting for the market to give you the look and then capitalizing on the advantages. And Cam, you're personally coming from the point of, I'm going to follow the training plan and the KISS plan and allow myself to be free of making emotional decisions. And Cam, I'm going to let you in on a secret. You're still going to make them. We all do. We all still make emotional decisions, guys. And it just happens. It's a part of it. But you'll see it, you'll recognize it, and you'll recover 1,000 times faster because you know that it was emotional and not pragmatic. So Aaron, with all the momentum, right, with room to that red fib, Aaron, if you were going to jump into the market, when price got above that divergence high, that was your jump in spot. And you knew exactly where the market could go because you saw that big red fib. And if that failed, Aaron, you had an area inside of triggers. Does that make sense? So this trade says, I hope it goes up with strong triggers on both charts. But if it doesn't, with that look, momentum and path, I've got a backup plan. I've got a safety net. I've got a parachute. Does that make sense, Aaron? So if I had to say one thing, if I were given some coaching, and I don't give trading advice, if I am going to jump the fudge in, but he didn't use fudge, it's the F dash 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 word, I demand momentum on both charts, and anything less than strong triggers is not good enough. And Aaron, this one thing, this one concept is going to change the whole dynamic of your jump in trades. Does that make sense? Because that's the immediate band-aid. If you can't stop yourself from jumping in, you can at least say, when I do it, I'm going to have momentum on both charts because then at least I've got a fighting chance. And this is day trading. And Aaron, I'm going to give you this as well. And guys, I don't teach this trade. It's not my trade. This is a Nexgen user trade that I studied because I saw merit in it, the chili dog trade. And the chili dog trade, is a trade that says if I have odds favorable momentum on the small and large chart, and if the back of the price bar clears on both, price gets away from the decision making, I will jump the fudge in and take small profits. And Aaron, there's pictures of it all day long. With momentum, with room to trouble, with momentum, giddy up. That's your chili dog trade. And it's a jump in that says the market is going so stinking strong, the reversal is less likely. All right, guys, that's it for me. What a good day. I hope you learned something. I really do.